Hello champions, I hope you are doing well. So in these last few days, as we're inching closer to the May 26 exams, I've brought in something for you over here which I think will really help you give that final touch to your preparation for CA Inter DT. So I did a small collab with Vivitsu, and in their reviewer in the total income chapter, the LDR questions, that's exactly what I worked out for you in this video. You will find the questions PDF in my Telegram channel. Even these classroom notes where I've solved everything, even that you can download from my Telegram channel. And I would insist print the questions PDF and then actually solve the questions with me on your notebook. Keep a calculator in your hand, keep a pen in your hand, and actually solve. Don't just watch it with me, actually solve, because in these last few days before your examination, some hands-on practice will be a good bonus for you. Okay, and apart from this, I hope you have already seen I have already uploaded the ultimate marathon of the entire syllabus of CA Inter DT based on the checkmate book, and also I have uploaded the 10 non-negotiable questions from your CA Inter RTP and MTP for DT applicable for your May 26 exams. These are the must do questions, guys, because they are from your RTP and MTP, and they are the new questions, the 10 new questions that is a must watch. So I think, and I've also made a proper playlist with all the free resources that are available for DT, and also another playlist for law, so that way you don't have to keep looking around for things. Alright guys, so that's it. I think with this we can start with the questions one by one. So starting with the very first question over here, the question says, Miss Purvi, age 55 years. What will you conclude at this stage? That Miss Purvi, you are not a senior citizen. Then the question says, he is a chartered accountant. She is a chartered accountant in practice. So you will say over here that she is a specified professional, guys. She is a specified profession. Section 44 ADA might come to your mind. Okay. Then the question says, she maintains her accounts on cash basis. This is the most important statement in this question, that she is maintaining her books of accounts on cash basis. This is going to be relevant for us because she is following cash basis of accounting when it comes to PGBP head and when it comes to IFOS head. In PGBP head and in IFOS head, in these two heads of income, we will follow whatever method of accounting assessee is following. Assessee is following cash basis of accounting, so even we will do the computation as per cash basis. Keep this point in mind. Income and expenditure account is given to us. I have the net profit number with me. Okay, then under this they have given us some 8 adjustments. What are they asking us? They're asking us to find the total income and tax payable by Miss Purvi for assessment year 26-27 in the most beneficial manner. Most beneficial manner means what? I have to do the computation as per the normal regime also. I'll have to do as per the default regime also, and I'll have to see where in which of the regimes the tax payable is lesser, and that is what will be the most beneficial manner. Right guys, are you ready? Can we start the game? Can we begin with normal regime first? Come on, this is a very first question. I'll just go as per the numbering of this handout. So this is question number 2. So we're doing a total income computation. Please do the solving with me. Don't just sit and watch over there. Solve with me. Take a notebook, take a calculator, take a pen and solve with me. Okay, total income computation I'll first do as per the normal regime. Okay, and then later I'll come back and do as per the default regime. Alright, so we have the P&L account over here, we have the net profit number over here, so of course we will have the PGBP head of income. Now PGBP, let's give reference to working note number 1. So working note number 1, PGBP. I have the net profit number over here. I'll take it. Net profit is 9,28,224. 9,28,224. Okay, now look at the credit side first, guys, and then we will come to the debit side. The question says fees earned, audit, taxation service, consultancy. Should I do anything about this? It is already credited in the P&L account, guys. It is assessee's professional receipt already credited in the P&L account. Nothing left for me to do. Then what else does the question say? Dividend on shares of X Limited, an Indian company. Where will this go? This has to go into my IFOS head. So what will I do in my PGBP head? How will I remove a credit? How will I remove a credit? How? By debiting it. Debiting means what? I will subtract it. So dividend income. I'll subtract the dividend income. How much is it? It is 10,524. I'll remove it from here and I'll take it to my IFOS head. So I'll open a new working note now. Working note number 2 for IFOS head. So after my working note number 1, I'll leave some gap. And then I'll open working note number 2, IFOS. So here we have dividend income. How much is the dividend income? 10524. Please notice there's one special point given to us over here. They're using the word gross. They are saying that this dividend income is gross. What does this indicate? That here tax would have been deducted. So later when I do the tax computation, they're asking for tax payable, right? So I have to keep in mind TDS, TCS credit also. That time I have to remember to calculate TDS on this income. Okay, they've given the gross income over here. See, had it been net income, I have to gross it up. But here they have already given me the gross income. So whatever income they've given me, I'm taking it as it is. But however, later when I do my tax computation, tax payable they're asking me. So in tax payable computation over there, I'll have to subtract TDS credit. No, there I will take this TDS credit from here. Okay, just highlighted it. We'll remember to take it little later. So coming to my next adjustment now, income from UTI, gross 7,600. What about this? Even this is already credited in the P&L. How will I remove it from my P&L? I have to take it into IFOS head, right? So how will you remove a credit? Same thing, you will debit it, you will subtract it. So come to your main answer. Income from UTI, what is the amount? 7,600. So I've removed it from my PGBP. I'm going to take it to my IFOS head. So here I am having income from UTI. The amount is 7,600. Even over here guys, they are using the word gross. Gross will indicate that here TDS is applicable. Had they given me the net number, I would have grossed it up. But because they have already given me the gross number, I'm taking it as it is. But later when I do tax computation, that time I have to remember to calculate TDS credit over here. Okay. Then comes a very important adjustment. Honorarium received from various institutions for valuation of answer papers. What about this guys? Honorarium will go to which head? Honorarium will also come into my IFOS head. So but then this is credited to P&L. So how will you remove a credit? Same thing, you will debit it, you will subtract it. So coming to my main answer over here, less honorarium, I am removing it from my PGBP. The amount is 15,800. I am taking it into my IFOS head. Honorarium amount is 15,800. Always taxed in IFOS head guys. Alright. Then we have rent received from residential flat let out. Which head of income will this go to? This will go into my IFHP head of income. But this is credited to my P&L. How will you remove a credit? Same thing guys. How will you remove a credit? You will remove the credit by debiting it. So I will debit it. I will subtract it. So coming to my main answer over here. Less rent, rental income 85,600. I have to take it to my IFHP head. Guys, by the way, this is rent from residential flat. What if it was rent from a plot? Rent from a plot of land, where will you take that? Rent from a vacant plot of land, rent from a residential plot of land, it will go into your IFOS head. Here it is residential flat. There's a house property, there's a superstructure, therefore IFHP head. Okay, so come to your main answer. IFHP, give reference to working note number 3. Now after your working note number 2, I'll leave some 5 to 6 lines gap and I'll open working note number 3, IFHP. Okay, over here it is a let out property guys. So let out property, you have the rental income right now, but you need a lot of information to compute let out property. You need municipal value, fair rent, standard rent. You need a lot of information. So for now what I'll do is I'll keep this pending for now. Later I'll finish reading the whole question. I'll see whether they've given me municipal value, fair rent, standard rent and all. Accordingly I will come back and I will do the IFHP computation. At least I've opened the working note over here, so I will not forget to do the computation later. Okay, now come to the debit side. Salary to staff, anything to do? No guys, it is a business expense, already debited in the P&L, nothing to do. What about stipend to article assistants? Even this is going to be a business expense, already debited in the P&L, nothing to do. Incentive to article assistants, you remember our SSC over here is a practicing CA. So for practicing CA, whatever stipend they have to pay to article assistants, whatever incentives they have to pay to article assistants will all be a profession related expense, right? And it's already debited to P&L, so therefore there is nothing left for us to do. Okay, then comes our next adjustment over here, office rent. Office rent business expense, already debited. Printing and stationery, meeting, seminar and conference, all these are professional expenses, already debited. What about purchase of car? Can car be debited to the P&L? No. On car, instead you will claim depreciation. So I have to remove this car from my debit side. How will I remove a car? How will I remove the debit? I will remove the debit by crediting it. I will add it back and then I will claim depreciation. So come back to your PGBP working note. Here I will add back car. Amount is 80,000 and then I will claim depreciation on the car. Depreciation on the car, can you tell me what's a depreciation rate? car 15% guys. So I'll assume the car is put to use for at least 180 days. I'll claim depreciation at the rate of 15%, which is going to work out to how much? Which is going to work out to 12,000 rupees. Okay, but can you please answer my question? Can I get additional depreciation over here? See, additional depreciation is only for cessis into manufacturing business or printing and publishing of books business or generating, distributing and transmitting power. Here a cessi is carrying on a profession. So therefore he is not eligible for additional depreciation. Also it's a car. It's a road transport vehicle. Therefore no additional depreciation. Okay. Then repair, maintenance and petrol, traveling expenses, nothing to do. What about municipal tax in respect of house? Remember guys, we decided that we will have IFHP head which we will compute later. So relating to IFHP head, I am having municipal tax. I have to remove this from my PGBP and take it to my IFHP. How will you remove a debit from PGBP? By crediting it, by adding it. So I'll add back, basically I'll disallow the municipal tax. What is the amount? 3,000. I'll add this back and now I have to take it to IFHP head. IFHP is anyways pending, so I'll highlight this also, it's anyways pending. Okay, then they've given me the net profit number which I already took over here. With this my P&L is okay. Everybody's comfortable? Yes, now come to the other information. Other information, they are saying allowable rate of depreciation on motor car is 15%. You tell me, do you have to wait for them to give you this information? No, you already know for car the depreciation rate is 15%. But wait, I have a question for you. What if this was electric car? What if this was an electric vehicle? Then what would the depreciation rate be? Do you know? For electric vehicles, depreciation rate is going to be 40% guys, because it comes under renewable energy saving devices. So had it been electric car, electric vehicle, then it would have been 40%. But here motor car 15%, we already did it. This information becomes irrelevant for us. Now come to the next information. Value of benefits received from clients during the course of profession is 10,500. This is again a unique adjustment in this question. Value of benefits received from clients during the course of profession. Where will this go? Are you aware of this point? I'll explain this to you over here. Listen to me. We have section 28 clause 4, okay? 28 clause 4 says if assessee is receiving any benefit or any profession which is relating to his business or profession, then this benefit or this perquisite, are you understanding? Assessee is getting a benefit or assessee is getting a perquisite relating to his business or profession. If this happens, the value of this benefit, the value of this perquisite will be taxed for the assessee under which head? Under the PGBP head. Now here the question is saying assessee is getting some benefit. Benefit is from whom? The benefit is from clients. So can I say benefit is relating to his profession guys? Because benefit has come from clients, so therefore the benefit is relating to his profession. The amount is 10,500. It has to be taxed under PGBP head. So let's tax it now. So you will add section 28 clause 4, benefits relating to assessee's business or profession. The amount is 10,500. Okay, so whatever I am highlighting in yellow in this PDF, they are all new adjustments for us, adjustments which maybe we are seeing for the first time. Okay, this was a second adjustment. Then comes a third adjustment, incentives to article assistance. Do you remember we had incentive to article assistance over here guys? They're giving us information about that. They are saying incentive to article assistance represents amount paid to two articled assistants for passing CA inter exam at first attempt. You tell me what to do over here. We are giving incentives to article assistants. They passed their CA exams, so we gave them some incentive. Guys, assessee is a practicing CA. So for him, whatever money, whatever stipend, whatever incentive, whatever he gives to article assistants will be an expense relating to his business or profession. It's already debited in the P&L account. Therefore, there's nothing left for me to do. This was your third adjustment. Then comes your fourth adjustment. The fourth adjustment says repair and maintenance of car includes 2,000 for the period from 1st October 25 to 30th September 26. This is the most important adjustment in the question. The biggest reason why I'm doing the question. The question says repair and maintenance of car includes 2,000 for the period 1st October 25 to 30th September 26. Come on everybody. Tell me which method of accounting is your assessee following? Which method of accounting, in this question, which method of accounting assessee is following? Assessee is following the cash basis of accounting. What did I tell you? The method of accounting which the assessee is following, that method of accounting is relevant for us in how many heads of income? It is relevant for us only in 2 heads of income, guys. It is relevant for me in the PGBP head of income, and it is relevant for me in the IFOS head of income. It is relevant for me only in these 2 heads of income. Okay. So because assessee is following the cash basis of accounting, you tell me, when will you consider an income? When will you consider an income? Will you consider an income when I earned it, or will you consider an income when I received it? I am earning an income. PGBP head, when will you consider an income? You will consider an income cash basis, guys, only when your assessee receives the income, only upon receipt. Similarly, tell me, assessee is following the cash basis of accounting. When will you consider an expense? You will consider an expense only when the assessee makes the payment of the expense. Does it matter to you the expense is belonging to which year? Does it matter to you whether the expense is belonging to my current year, whether it is not belonging to my current year? Does that matter to you? That doesn't matter to me. What matters to me is when did the assessee make the payment? The question says assessee has made the payment in the current year. That's all what I care about. Keep this in your mind, and now come back to this adjustment, repairs and maintenance. First of all, do you remember we had repairs and maintenance over here? 4,000 rupees. So in that 4,000 rupees, they are saying 2,000 relates to 1st October 25 to 30th September 26. 1st October 2025 to 30th September 2026. Which year is this? Do you agree that this period is partly previous year 25-26 and partly it is previous year 26-27? So this expense is belonging to 2 years, 6 months in my current year and 6 months in my next year. Had my assessee been following the accrual basis, what I would have done? Only current year's expense I would have taken. I would have said, oh, assessee, you are paying 2,000 rupees, half for current year, half for next year. So I will take only 1,000 rupees. You will say, had it been accrual basis of accounting, guys, had it been accrual basis, only proportionate, which is belonging to the current year, only that you would have taken. But here my assessee is following cash basis of accounting. I don't care the expense is belonging to which year. Tell me, when did your assessee make the payment? Tell me, did your assessee make payment in the current year? It's an expense, guys. You're going to consider the expense when your assessee makes payment of the expense. Did he make the payment in the current year? Yes, he's made payment in the current year. Therefore, you're going to consider the entire expense. Understanding, everybody? Had it been accrual basis, only 1,000 I would have allowed. Balance 1,000 I would have disallowed. Here, assessee is following cash basis. So, doesn't matter the expense is belonging to which year. What matters is when has the assessee made the payment. Assessee made the payment in the current year. Therefore, this entire amount will be allowed in the current year. It is already debited in the P&L account. So, is there anything left for me to do? There's nothing left for me to do. Understanding, very interesting question. Tell me, what were our highlight points until now? First point, honorarium always which head of income? Always IFO is head of income. Then second highlight point, benefits. You understood the benefits point? You understood section 28 clause 4. Any benefit or perquisite you get relating to your business or profession will be taxed for you in PGBP head. Then we had a very important learning over here with regards to the cash basis of accounting. So because assessee is following cash basis of accounting, whatever assessee has paid in the current year, whatever expense he has paid in the current year, whether it is belonging to the current year, whether it is belonging to the next year, I don't care. He has made the payment in the current year, so current year it will be allowed. Okay. Then come to the fifth adjustment, salary. Salary includes 30,000 rupees to a computer specialist in cash. For assisting Miss Purvi in one professional assignment, we have made payment of salary. 30,000 payment we have made. We have made this payment in cash. You first tell me which section is coming to your mind. Expense more than 10,000 rupees, made the payment in cash. Of course, you will think about section 40A subsection 3, guys. Come on. More 30,000 rupees, more than 10,000 rupees. We have made the payment in cash. We have made the payment in non-specified mode. So, of course, 40A subsection 3 will come into the picture. But my $1 million question for you is, yes, you're right, 40A3 will come into the picture. Yes, you're right, I have to disallow the expense. But my question to you is, how much will I disallow? Will I disallow 30,000 fully? Or will I disallow the excess of 20,000? If 40A subsection 3 is applicable, what do you disallow? If 40A subsection 3 is applicable, you disallow the entire expense, guys. Not just the excess, you disallow the entire expense. So under 40A subsection 3, salary, 30,000 we made the payment in non-specified mode, fully I will disallow. Okay, then comes one more interesting adjustment, traveling expense. First of all, do you remember we have traveling expense in our P&L? See here, traveling expense 5,25,000 we are having. They're giving information about that. Okay, traveling expense includes expenditure incurred on foreign tour of 32,000. If I stop the question over here, is it okay for you? Traveling expense, expenditure incurred on foreign tour, is it okay? Is it allowable or is it not allowed? Just because it is foreign travel doesn't mean it is not allowed. See guys, I incur traveling expense. Traveling expense is for my business or profession, let us say. Whether it is domestic travel, whether it is foreign travel, doesn't matter. Any travel expense I incur relating to my business or profession, it is allowed. Already debited in the P&L, nothing is left for me to do. Now continue reading. Which was within the RBI norms. I don't care. I incur travel expense for the purpose of my business or profession. Whether it is domestic travel, whether it is foreign travel, I don't care. Whether it is within RBI norms, whether it is beyond RBI norms, I don't care. I incur travel expense. Expenses for my business or profession. That's all. It will be allowed. Did you understand? This is another very interesting adjustment. They're trying to confuse you by two things. The first thing that they're telling you to confuse you is foreign tour. I don't care. Second thing they are saying to confuse you is RBI norms. I don't care. What do I care? Assessee has incurred expense. It's travel expense. It is relating to his business or profession. That's all. It will be allowed. Okay. Already debited in the P&L. Nothing is left for me to do. Then comes your next point. Medical insurance premium on the health of dependent brother and major son dependent on her amounts to 5,000 rupees and 10,000 rupees paid in cash. Step by step we will go, no tension. Medical insurance premium. Which section are you thinking about first? Which section are you thinking about? Section ATD guys, chapter 6 you will think about? You will think about section ATD. Now in ATD, is there any concept about mode of payment? Anything that ATD says about mode of payment? ATD says, I don't care about the amount, the payment has to be made in non-cash mode only. Here we made payment of medical insurance premium. You're perfectly right, I will think about ATD. But however, assessee is making the payment in cash. ATD says payment has to be in non-cash mode, only then it will be allowed. Here payment is in cash, therefore no ATD. But however, let's change the question a little bit. What if the question was about preventive health checkup? Preventive health checkup also ATD. In that also, will you be particular about the mode of payment? No. If it is preventive health checkup, I don't care about the mode of payment. Whatever be the mode of payment, it will be allowed. Only thing is maximum 5,000. That's it. That's all. Okay. This was a medical insurance adjustment. Then comes the last adjustment. She invested 10,000 rupees in National Saving Certificate. Where will this go? National Saving Certificate, ATC. ATC will go to my chapter 6A. So I'll open a new working note. Working note number 4. For chapter 6A. So here only one adjustment I'm having, ATC. ATC amount is how much? 10,000 rupees. It is within the maximum limit of 1,50,000. So full 10,000 I will allow. That's it with my question. Now what are we left with? Remember we were left with IFHP guys. Come on, let's come to that. By the way, did they give me municipal value, fair rent, standard rent? We read the whole question. Municipal value, fair rent, standard rent, nothing they have given to me in the question. So how will I find the GAV? Tell me. It is let out property. My assessee owns the property for all 12 months. For full year, I have to do the computation. Let out property, I will start with GAV. For GAV, I need municipal value, fair rent, standard rent, all that I need. No information is given. I will use a shortcut. What's a shortcut? Actual rent minus unrealized rent minus vacancy loss. What's your actual rent? 85,600. No unrealized rent, no vacancy loss. Less municipal taxes paid. Remember how much municipal tax have we paid? Given over here, remember? Municipal tax paid 3,000. So what's your net number now? 82,600 will become your NAV. From this, I will subtract deductions under section 24. I'll have two deductions. Number one, I'll have standard deduction at 30%, which is going to be 24,780. Then we'll have interest. We read the whole question, guys. Did we have any interest? We did not have any interest for the house property. So my net number 82,600 minus standard deduction, my net number 57,820 will be my IFHP. Alright, that's it guys. Please go ahead and close the question. Give me the net PGBP number first. Net PGBP number. I am getting 9,20,200 for PGBP. Is my number and your number matching? 9,20,200. Then come to IFOS. Total IFOS is 33,924. 33,924. Then what about IFHP? Even IFHP we had finished. Here 57,820. So give me your give me your GTI first. GTI will be 10,11,944. Till here is a number matching. Then comes chapter 6A. But before we subtract chapter 6A, what do we always check? Tell me, should I split my GTI over here? Tell me, do I have any special rate income over here? No, right? So no need to split my income. Straight away I will compute my chapter 6A. So chapter 6A give reference to working note number 4. Only one chapter 6A you had, NSC, and the amount was 10,000. That's it, guys. So what's your total income as per the normal regime? 10,01,944. But my answer is not complete as of now. What should I remember to check? Rounding off. Total income has to be rounded off to the nearest multiple of 10. So I will round this off to 10,01,940. Perfect clarity. Yes, everybody. Now come on, guys, this was a total income computation as per normal regime. They also asked us for tax payable. Let's start that. So tax payable. Did you notice? They did not ask for tax liability. They asked for tax payable. Okay. So I'll start by checking which regime are we following over here. We are following the normal regime. Normal regime, what's a basic exemption limit? Does the question say assessee is a senior citizen, super senior citizen and all? No. So basic exemption limit will be 2,50,000 only. Do I have any special rate income over here? No special rate income, guys. Straight away I can start computing tax. So first I will have basic tax. So 0 to 2,50,000 slab rate, guys, 0. Then 2,50,000 to 5 lakh. On that 2,50,000, 5% tax, 12,500. Then 5 lakh to 10 lakh. On that 5 lakh, 20% tax, which is 1 lakh. Then above 10 lakh, what is my income above 10 lakh? 1,940. That into 30% tax, that's going to be 582. So what's your total basic tax? 1,13,082. Then will I get 87A rebate? Assessee is an individual, assessee is a resident, total income is more than 5 lakh, guys. So no rebate. So no surcharge also. Straight away I will add cess at 4%. So 4% cess will be 4,523. So once I add cess, my total tax liability will be 1,17,605. But the good news is they did not ask for tax liability. They asked for tax payable. So this is my tax liability. From this I will subtract my TDS credit, TCS credit and advance tax and all. That's how I will find my tax payable. Tell me, how many places have we identified TDS credit? 2 places we have identified TDS credit. Wherever we have gross, we have identified TDS credit in 2 places. So dividend, TDS on dividend, what's your section? TDS on dividend, section 194. So section 194 TDS credit I will have. What is the amount? What's the tax rate in 194? 10%, guys. So 10524 into 10%, 1052. Then we have section 194K TDS credit. This will be regarding income from UTI, income from mutual fund, income from UTI. This will go to section 194K. 194K also 10% TDS only. So 7,600 into 10% TDS, 760 rupees. So what is going to be your tax payable now? 1,15,793. This is going to be my tax payable. I'll tell you one small thing at this stage. They said income from UTI. It is 194K. In 194K, actually, the tax rate, the limit, in 194K, actually, the limit is 10,000, which means only if the income is more than 10,000, then only I will have TDS. Okay. But here they've mentioned the word gross, which is a clear indication for us that we have to think about TDS. So whether it is more than the limit, whether it is less than the limit, we will not even waste our energy thinking about it. Because they are saying gross, I will simply take TDS credit over here. Okay. So 2 TDS credits I had in 194 for dividend and 194K for income from UTI, income from mutual fund. So my tax liability is 1,15793, which I will round off to 1,15790. This was in my normal regime. Now please tell me, normal regime tax computation is not complete till you think about AMT. Will I have AMT in this question? Is my assessee having 10 AA tax holiday? No. Is your assessee having 3580 deduction for specified business? No. Is your assessee having Chapter 6A Part C like 80QQB, 80RRB, 80JJAA? No. Therefore, will my assessee have AMT? No. So my normal regime tax computation is over. Tax payable is 115790. Now, are you ready? Can we redo the whole thing as per the default regime? Come on guys, let's recompute our income as per default regime. So total income as per the default regime. Will we do the hard work of recomputing all over again from the beginning? Chanceless. I will simply take the total income number as per the normal regime and I'll play games with this number to arrive at total income for default regime. Come on, tell me, what's the total income as per normal regime? Take the number before rounding off. 10,01,944. 10,01,944. Go working note by working note and see that do we have any sort of adjustment which we have to reverse for 115 BAC. Tell me, PGBP head. Do I have any additional depreciation over here? Do I have any contribution to outside of a scientific research over here? Do I have any 3580 deduction over here? No guys. So no impact in PGBP head. IFOS, no impact. IFHP, let out property only. No impact. Had it been self-occupied property, that only will get impacted because of default regime. So no change. Only one thing then, Chapter 6A. Chapter 6A ATC, that alone I have to reverse. The amount was 10,000. So my total income as per the default regime is going to be 10,11,944. This will become the total income as per our default regime, which we have to remember to round off to 10,11,940. So now come on, let's go to the next step. We also have to do tax payable computation as per the default regime now. So which regime are we computing tax? Default regime. And what's our basic exemption limit? Default regime, basic exemption limit, 4 lakh rupees. So, do I have any special rate income? No special rate income. Straight away I can start computing. I'll apply my slab rate. So, basic tax, 0 to 4 lakh, 0. Then 4 lakh to 8 lakh. On that 4 lakh, 5% tax, which is 20,000. Then 8 lakh to 12 lakh. My income is falling in that range only. So, 8 lakh to 10 lakh, 11,940. What's the difference? 2,11,940 into 10%. Usual slab rate I'm applying, guys. This is going to be 21,194. So my total tax on the basis of slab rate will be 41,194. Now what do I think about? Do not make the blunder of straight away going to says. Follow the steps. After basic tax, what do you think about? You think about 87A rebate. Will I have 87A rebate over here? Assessee is an individual. Assessee is a resident. Default regime, guys. Total income is within how much? Total income is within 12 lakhs. I will get rebate. So therefore, the entire 41,194 will become my rebate. So my tax liability will be 0. Tax liability 0. But I have not forgotten. Have you forgotten? We have TDS credit, TCS credit and all. I will claim all that. So come on. And by the way, what's your maximum rebate possible under the default regime? Do not forget, in default regime, maximum rebate you can enjoy is 60,000. So now come on, we have TDS credit. Same numbers. We have section 194 TDS credit. And we have section 194K TDS credit. Bring the numbers. All these numbers will be the same. We have 1052 and then we have 760 rupees. These numbers will be exactly the same. So what's your net number now? I'm going to get a negative number. Negative 1812, which I'm going to round off to 1810. What is this? It's a negative number. Negative, had it been a positive number, it will become tax payable. If it's a negative number, it will become refund due. So you tell me now, which option is better? They were asking us which is most beneficial. Come on everybody, give me your final conclusion now. Had I followed the normal regime, what is my tax payable number? My tax payable number is a big huge number. I have to pay 1,15,790. But if I follow the default regime, then I get a refund of 1810. So of course, which is more beneficial? Of course, the default regime is more beneficial over here because it will result in a refund for me of 1810. Got it, guys? So this was a very first question that we worked out. Can I quickly remind you once again of all our learnings in the question, whatever we highlighted in yellow? Our first big learning, honorarium will go into our IFOS head. Second big learning, any benefit you get relating to business or profession taxed under PGBP head 28 clause 4. Then the cash basis of accounting made a big difference to us. Assessee is following cash basis of accounting. So even though a part of the expense is belonging to the next year, it didn't matter to me. Assessee made the payment in the current year. Therefore, I allowed the entire expense. Then anything else? The travel expense, they nicely tried to confuse us. Just because it is foreign travel, I don't care. Just because it is within RBI norms or more than RBI norms, I don't care. Travel expense relating to business or profession, allowed. Okay. Then NSC, ATC. Alright, everybody, can I close this question? Can I take you to the next question, please? Yes, come on. Come to question number 15 now. Question number 15 is another amazing question, guys. Another pure total income question. Here, a little bit of capital gains will get revised for you. A little bit of your chapter 6A part C. 80 QQB and all will get revised for you. 10 AA will get revised for you. It's a very different kind of a question. Let's read the question and then we will work it out. So let's see what the question says. The question says, Mr. Anand, a resident Indian aged 45 years. What would you like to conclude at this stage? What will you call Mr. Anand? I will call Mr. Anand not a senior citizen. Because he's only 45 years old. He provided you the following information. A lot of information they have given to us. What are they asking us? Compute total income and tax liability, both total income and tax liability under 115 BAC as well as normal provisions. Even here, both regimes. Even over here, they're asking us as per the normal regime also, as per the default regime also, both they are asking us. Total income also, tax liability also. Guys, they're saying tax liability, not tax payable. So here I will not bother about TDS credit, TCS credit, advanced tax and all. I will not bother about that. Ignore AMT. So I can ignore AMT. Now you will say, ma'am, we want some practice on AMT. Chill. We will see one question a little later where AMT will get covered for you. So no tension. Okay. Come on. Can we start the question, everybody? Will you promise to give me your best possible answers? 100% accuracy. Absolutely no silly mistakes. Okay. Sit up straight and let's work this question out. So he owns an industrial undertaking. By the way, what are we computing first? We are computing total income. As per which regime are we computing? As per the normal regime we are computing first, okay? Later we will compute as per the default regime. He owns an industrial undertaking established in SEZ. Immediately what is coming to your mind? I'll tell you what is coming to my mind. To my mind, immediately 10 AA is coming to my mind. Then, so he owns an industrial undertaking which had commenced operation in 1819. So this is important, keep it in your mind. The unit commenced operations in 1819. Total turnover is how much? Total turnover of the undertaking was 200 lakhs. Okay. Then export turnover received in India in convertible foreign exchange on or before 30th September 26 is 120 lakhs. This industrial undertaking fulfills all the conditions of 10 AA. Shortcut. We don't have to think about the conditions. They are itself saying all the conditions of 10 AA are fulfilled. Profit from this industry is 35 lakhs. Should I straight away start 10 AA computation? That is the biggest blunder that students make. As soon as they see SEZ, only 10 AA is coming to their mind. What you should also do? Don't you think, first of all, that profit has to be taxed under PGBP head? Then only I will go to 10 AA. So step by step. So I'll open my PGBP working note. Working note number 1. Working note number 1, PGBP. Here I have net profit from the SEZ unit. What is the amount? Profit from this industry is 35 lakhs. See, given right here. 35 lakhs. First tax the profit in PGBP head. Now go to 10 AA. Okay. So after working note number 1, I leave 4 to 5 lines gap. And then I'll open working note number 2, section 10 AA. Now 10 AA, how do you compute, guys? Generally, I ask students to follow one sequence. I'll tell you what is a sequence. We first check the conditions. Here I don't have to check the conditions, guys, because the question itself says conditions are fulfilled. So I don't have to check the conditions. Then tell me, which year am I in right now? Right now, I am in previous year, 25-26. Now, when did my SSC commence this unit? The question says, unit was commenced on 1 second. The question says unit was commenced in 1819. Okay. So which year are we in? If you subtract, you will actually get 7th year. But I always add a 1 and it will become the 8th year. Why do we add a 1? Do you know that? I'll tell you. Even the year in which you commenced business, even that year you will be eligible for 10 AA, guys. Which means even 1819 also has to be included. So you will add a 1 to include 1819 also. No ma'am, didn't understand. Listen to me. 1819 is the first year. 1920 second year. Then 2021, 21 22, 22 23, 23 24, 24 25, 25 26. Sit and count. Tell me, my current year is which year? 1, 2, 3, 4, 5, 6, 7, 8. Now understood. That's all, guys. Why do I add a 1? Because even the year in which we commenced business, even that year I have to include. That is why I generally add a 1. Okay. So we are in the 8th year. Because I'm in the 8th year, how much reduction will I get, guys? Had it been first to 5 years, full 100% you will give me. This is next to 5 years. Only 50% reduction you will give me. Okay. Then let's write the formula. 10 AA tax holiday will be how much? Whatever is a net profit or PGBP of this SEZ unit into export turnover by total turnover into percentage. What's the percentage over here? 50%. What is the net profit of this unit? We've already written, guys. Net profit of this unit is 35 lakhs. Then what is the export turnover? See, they're saying export turnover is 120 lakhs. But all this extra information received in convertible foreign exchange, what is all that? The law says, the income tax act says, whatever is our export turnover, we actually have to realize in convertible foreign exchange within 6 months from the end of the year. What is my year? 25-26. What is the end of my year? 31st March 26. From this 9 months will be 30th September 2026. So export turnover has to be brought back into India by this date. The question is saying that only over here, that it is received in India in convertible foreign exchange by 30th September 26. So what they are saying is condition is fulfilled. So whatever is my export turnover, entire export turnover we have brought into India within 6 months from the end of the year. So full export turnover I will take. What is the amount? 120 lakhs. What's the total turnover? See, given to us. Total turnover is 200 lakhs into 50%. That's all, guys. Give me the net number. How much are you getting? I am getting 10,50,000. This is my 10 AA tax holiday. I'll remember to take this number towards the end. Then come to the next adjustment. The next adjustment says Mr. Anand, your SSE, he sold equity shares. Which head of income is coming to your mind? Capital gains head will come to your mind. Sold equity shares of different Indian companies on 14th March 26. So what is 14th March 26? This becomes your date of transfer. So Mr. Anand sold equity shares of different Indian companies on 14th March 2026. This is your date of transfer. Two different companies, guys, Sam Limited and Jam Limited. Sale value they have given. This will become your full value consideration. Purchase price they have given. This will become your cost of acquisition. STT is paid at the time of acquisition. STT is paid at the time of acquisition. Acquired on date of acquisition is given to us. Number of shares is given to us. And FMV on 31st Jan 2018 is given to us. Then they've given us the CII numbers. Sale proceeds were subject to brokerage 0.1%. What is this brokerage number? This will become my expense on transfer. Then STT of 0.125% on the gross consideration. So which means, can I say I am paying STT when over here? Question clearly says we are paying STT at the time of acquisition. And here the question says sale proceeds is also subject to STT. So which means in this question I am paying STT both at the time of acquisition also, at the time of transfer also, both the times I am paying STT. Are we clear? In this question, we are paying STT both at the time of acquisition and at the time of transfer. Okay, at the time of acquisition is given here itself. At the time of transfer is mentioned over here that sale proceeds were subject to STT. So which means we are paying at the time of transfer also. Now come on, guys, let's begin. So let's open working note number 3, capital gains. So we're selling shares of how many companies? Two companies, Sam Limited and Jam Limited. I'll do one by one. Let's talk about Sam Limited first. When did we purchase Sam Limited shares? By the way, what kind of shares are these? We are paying STT. So can I call them as listed equity shares? So for Sam Limited, they are listed equity shares. When did we buy the shares? See, date of acquisition, 2nd February 2025. And what's your date of transfer? 14th March 2026. So my date of transfer is clearly after the amendment. It is after 23rd July 2024. So what's your relevant period of holding? Listed equity shares, relevant period of holding 12 months. This is definitely more than 12 months. I'll call it long-term capital asset. Which section will apply, guys? 112 or 112A? Listed equity shares. Listed equity shares, STT is paid at the time of acquisition also, transfer also. Long-term capital asset, of course, 112A will apply. Then comes Jam Limited. Here also we have listed equity shares because we are paying STT. When did we buy Jam Limited shares? 16th April 2017. And when did we sell? Date of transfer remains the same, 14th March 2026. Even these are listed equity shares. More than 12 months? Yes. Therefore, it becomes long-term capital asset. Even over here, 112A will be relevant. Okay. Now, come on. Let's start our computation of capital gains. Guys, I have a small doubt, okay? They are both listed shares. Even this is listed shares. Even this is listed shares. So both are 112A, 112A, 112A. So can I do one single calculation for both put together? Like total full value consideration, total cost of acquisition. That way I will be able to save my time. Terrible. No, we can't do that. See, even if the shares belong to the same company, here to different company, but even if they belong to the same company, still, if I acquired the shares on two different dates, then I'll have two different periods of holding. I'll have two different costs of acquisition. So please don't resort to shortcuts like that. Each kind of shares, each company's shares, separate column. Even if this was same company's shares, even then, because I acquired them on different dates, separate columns. Okay, so come on, let's make a 3-column table over here. One column will be for particulars, one column will be for Sam Limited shares, and one column will be for Jam Limited shares. Okay, so let's begin. Full value consideration. What's our full value consideration? Given right here, 150 rupees per share. So Sam Limited, how many shares? 2000 shares. So 150 into 2000, 150 rupees, 2000 per 2000 shares. Total full value consideration will become 3 lakh rupees for Sam Limited. Now what about Jam Limited? 100 rupees per share. Total 1250 shares. This is going to become 1,25,000. Then less expenses on transfer. How much is our expense on transfer? The question clearly says brokerage 0.1%. So full value consideration into 0.1%. 300 rupees and 125 rupees. I have another question for you at this stage. Tell me, can STT ever be an expense on transfer? No guys, STT can never be an expense on transfer. Okay, STT can be an expense on transfer only in PGPP head. That too only if it is assessed business to buy and sell shares. If assessed is a share trader, for him STT will become a business expense. But in capital gains head, STT, CTT, they can't be expenses on transfer. Okay, so give me your net consideration number now. 2,99,700. Then you will get 1,24,875. This is your net consideration. Now from this you will subtract cost of acquisition. Now slow down. This is where little bit drama comes into the picture. Are you aware of the grandfather clause provision? The one where we take FMV on 31st Jan 2018 and all. Okay, listen to me. When do we apply that grandfather clause provision? If it is long-term capital asset plus 112A plus date of acquisition on or before 31st Jan 2018, that is when we apply the grandfather clause. Let's go asset by asset. Let's talk about just Sam Limited. Is it long-term capital asset? Yes guys, Sam Limited is a long-term capital asset share. Is it 112A? Yes, it is 112A. But tell me, Sam Limited shares is date of acquisition before 31st Jan 2018. No, guys. Sam Limited shares date of acquisition is 2nd February 2025. Is date of acquisition before 31st Jan 2018? No. So tell me, will the grandfather clause apply? No. So because grandfather clause will not apply, what will you do with Sam Limited cost of acquisition? You will take the actual cost of acquisition as it is. What's the cost of acquisition for Sam Limited? 120 rupees per share, total 2000 shares. So the cost of acquisition will become 2,40,000. No grandfather clause over here. But now let's talk about Jam Limited. Is it long-term capital asset plus 112A plus date of acquisition on or before 31st Jan 2018? Check. Jam Limited, it is long-term capital asset. It is 112A. Date of acquisition is on or before 31st Jan 2018, which means here grandfather clause will apply. So for the cost of acquisition of Jam Limited, here I'll give reference to working note number 4. I'll open a new working note, cost of acquisition, Jam Limited. Did you understand why am I thinking about the grandfather clause over here? Because it is long-term capital asset. It is 112A and date of acquisition for Jam Limited is on or before 31st Jan 2018. Therefore, the grandfather clause will apply. Now tell me, what does a grandfather clause say? How will we compute cost of acquisition? Very simple, guys. Point A, point B, whichever is higher. That's all. What is point A? Point A will be your actual cost of acquisition. Tell me, Jam Limited shares, what is the actual cost of acquisition? 72 rupees. Then point B will be FVC or FMV on 31st Jan 2018, whichever is lesser. Tell me, what's the FVC for Jam Limited? FVC is 100. Then what is FMV on 31st Jan 2018 given right here? 50 rupees over here. So out of these two numbers, which is lesser? 50 rupees. Then 72 or 52, which is higher? 72 or 50, which is higher? 72 rupees. So 72 rupees into how many shares? 1250 shares. So what's your cost of acquisition for Jam Limited shares? 90,000 will become your cost of acquisition. So here I've applied the grandfather clause. You understood? You tell me yourself what silly mistake is possible over here. According to me, two silly mistakes are possible. Silly mistake number 1, some students might end up applying grandfather clause in both, whereas in Sam Limited, grandfather clause is not applicable. Second silly mistake that is possible over here is that the student might forget about grandfather clause. So two silly mistakes possible. Be careful. Sam Limited also was 112A. Jam Limited was also 112A. It must have been a big eye-opener for you over here that, okay, for Sam Limited, because acquisition is after 31st Jan 2018, no grandfather clause, that might have come like a big eye-opener for many of you over here. Right, guys? Now, come on, let's start. Let's finish off the computation. So this was working note number 4. Now, no cost of improvement. What is your 112A LTCG? I am getting 59,700 for Sam Limited and I am getting 34,875 for Jam Limited. So what is going to be your total 112A LTCG? Total 112A LTCG will be 94,575. Understood or understood? 112A. Done, guys. Yes, and by the way, will I think about 1,25,000 exemption right now? No. When do I think about the 1,25,000 exemption? Only when I compute tax, that time only. Okay. So come back to your main answer now. Section 112A LTCG we are having. Give reference to working note number 3. How much is your 112A LTCG? 94,575. Done, guys. A big, huge adjustment we're done with. Now come on, come to the third adjustment over here. The third adjustment. Are you ready? See what the question says. He made payment. One second. He made payment of 90,000 on 1st September 25. Wide check towards medical insurance. Which section is coming to your mind? Medical insurance premium. Immediately 80D will come to your mind. So he made payment of 90,000 by check. Is check okay for you? Yes, 80D says payment has to be made in non-cash mode, and here it is non-cash mode. So we paid 90,000 rupees by check on 1st September 25 as lump sum premium for himself and his wife till 31st August 2029. So I'll take a fresh page. I'll give you some concept revision over here. See, what is the duration of the policy? We made the payment on 1st September 25. Policy is till 31st August 2029. So tell me, this policy is touching upon how many previous years? It is touching upon previous year 25-26, 26-27, 27-28, 28-29, 29-30. Even though it's a 4 years policy, it is touching upon 5 years. So how much lump sum premium you paid? 90,000. You will divide by 5. So per annum, each year how much deduction will you get under 80D? 18,000 only. Okay. So this is still here. Then he also made cash payment of 7,500 towards preventive health checkup for himself and wife. Is cash payment okay for preventive health checkup? Yes, no problem. Amount is 7,500. You will restrict it to 5,000. So total 80D will become how much now? 23,000 will become your total 80D. So come back to your answer. Open. We don't have a chapter 6A working note, no? We don't have it. So open working note number 5. Chapter 6A. Here you have section 80D. In 80D we have two adjustments. One is the lump sum premium 90,000. We divided it by 5. You understood? Even though it's a 4 years policy, why am I dividing it by 5? Because the policy is touching upon 5 years. So 90,000 divided by 5, the amount is going to be 18,000 rupees. 18,000 rupees. So then after this comes our next point, preventive health checkup. How much is preventive health checkup amount over here? 7,500 rupees, which we will restrict to 5,000. So my total is going to be 23,000 rupees. Till here clear? So coming to my next adjustment now, the question says he received royalty of 2,88,000. Royalty income will go to which head of income? IFOS head of income. So come to your main answer and write down IFOS. Give reference to working note number 5. So after my working note number 4, not working note number 5, working note number 6. Working note number 6. So after working note number 5, I'll open I'll leave some 3 to 5 lines gap, and then I'll open working note number 6 for IFOS. Now slowly, carefully, let's read the adjustment. It's a very important adjustment. The question says he received royalty of 2,88,000 from abroad for a book. So it is royalty relating to book authored by him in the nature of artistic. The rate of royalty is 16% value of the books, and expenditure made for earning this royalty was 40,000 rupees. Amount remitted to India till 30th September is 2,50,000 rupees. Tell me in IFOS head, first of all, how much will I tax? How much royalty income did we earn? Our royalty income is 2,88,000 rupees. Then to earn this income, how much expense have we incurred? We have incurred expense of 40,000 rupees. So what is the net royalty income which will be taxed under IFOS head? 2,48,000 will be taxed under IFOS head. Step by step we will go. Royalty income, immediately did you notice? Did I immediately jump to 80 QQB RRB? No, I'll go step by step. First, whatever is royalty income, I will first tax it under IFOS head. The entire royalty income minus expense, I tax it under IFOS head. Now I will come to chapter 6A. You tell me which section in chapter 6A. It is royalty relating to books. Had it been royalty relating to patents, you will see 80 RRB. This is royalty relating to books. So therefore, this is going to be section 80 QQB, guys. Now in 80 QQB, there will be 3 simple adjustments, okay. First, see how much is royalty income. How much income we got for royalty? 2,88,000. Okay. There will be total how many line items? Totally how many adjustments I told you? 3 simple adjustments I told you. Adjustment number 1. First of all, you see, is it in percentage? Yes, it is 16%. You will restrict it to how much? You will restrict it to 15%. You remember, in 80 QQB, maximum how much royalty is allowed? Only 15% is allowed. So if it is in percentage, you have to restrict it to 15%. Here it is 16%. So I will restrict it to 15. How will I restrict it to 15? Very simple, guys. 2,88,000 is 16%. So what is 15%? Simple cross multiplication, nothing difficult over here. So 2,88,000 into 15 by 16. Simple cross multiplication I'm doing. So I'm restricting it to 15% first, which is going to be how much? 2,70,000. Then, out of this number, the second line item, you have to see how much has been realized and brought into India within 6 months from the end of the year. That is, how much has been realized and brought to India within 30th September 2026. You tell me, guys, how much has been brought to India by 30th September 2026? The amount remitted to India till 30th September 2026 is 2,50,000. So, this is the number I will take now. Then, from this number, you're supposed to subtract the expense. So 2,50,000 minus how much expense we have incurred? 40,000. So what's my net number now? 2,10,000. Now this 2,10,000 we will compare with the maximum limit. Can you please tell me what is the maximum deduction that you can get under 80QQB? Maximum is going to be 3 lakhs. So 2,10,000 or 3 lakhs, which is lesser? What's your final 80QQB deduction? Your final 80QQB deduction is going to be 2,10,000 rupees. I'm hoping this is clear for everybody. Yes, guys. So this was your working note number 5 for chapter 6A 80QQB. I hope you are following. Very simple. I'll give you a revision once again. How many line items in my 80QQB? 3 line items. What's the first thing I did? If it is in percentage, I will first restrict it to 15%. Then I will see how much of the royalty is brought to India within 6 months from the end of the year. Then from that number, I will subtract the expense. Whatever is the net number, this net number or 3 lakhs, whichever is lesser will become your 80QQB. So 2,10,000 is lesser. That is my 80QQB deduction over here. Okay. Then come to the next adjustment. He received income tax refund of 15,750, including interest of 1,750. Tell me, income tax refund, is it taxable? No. But interest on income tax refund, interest is taxable. Taxable under which head? Taxable under IFOS head. So in my IFOS head, I have one more line item now, and that is interest on income tax refund. Income tax refund is not taxable, but interest on income tax refund is taxable. The amount is 1,750. This is also done. Then comes a very interesting IFHP adjustment. Are you ready for the game? Let's read the question and let's see what is it saying. He occupies ground floor, which means ground floor is self-occupied. So ground floor is going to be self-occupied over here and has let out the first floor. First floor is going to be let out. So we have self-occupied property also, let out property also. So he occupies the ground floor and he has let out the first floor for residential use for a monthly rent of 15,000 rupees. He paid municipal tax 30,000 rupees for the current financial year. Both floors are equal size. He took a loan from a bank. 50 lakh rupees for constructing this property, and he repaid 2,05,000 including interest 1 lakh. So total 2,05,000 he has repaid, which includes interest 1 lakh, which means we have paid interest of 1 lakh. And what's the balance repayment then? Total 2,05,000 we have repaid. In that 1 lakh is interest. So the balance 1,05,000 will become my principal repayment. Okay. Are you ready? Let's handle this entire adjustment. So I'll open a new working note. Working note number 7 for IFHP. Tell me how to start. How many kinds of properties I'm having? 2 kinds of properties I'm having. Let out property and self-occupied property. My assessee owns this property for how many months, guys? The assessee owns this property since 2020, since long back. So current year, all 12 months, my assessee owns a property. So computation will be for all 12 months. How to start the computation? We start with gross annual value. What's our gross annual value over here? See, we don't have municipal value, fair and standard rent and all. We don't have. Shortcut I will use. What's my actual rent? Monthly rent 15,000. So 15,000 into 12. That's going to be 1,80,000. Less municipal taxes paid. Open your eyes and tell me with a very sharp mind, can I take municipal tax of 30,000 fully? No blunders, no silly mistakes. 30,000 is for the entire property. I am doing only for the let out portion. Only half I will take, which is 15,000. So what's your net annual value? Net annual value will be 1,65,000. This is where self-occupied property will enter the story with a 0 NAV. Then less deductions under section 24. Number 1, I will have standard deduction, 30% of my NAV number, which is going to be 49,500. Then, do I have any interest on borrowed capital? Yes, we do have interest of 1 lakh. Is there any pre-construction interest in the question, guys? See, the question says that the loan was taken in 2020. He took a loan for construction in 2020. But when was construction completed? They didn't give information. So no pre-construction interest. I'll only have current year interest over here. What's our interest amount? 1 lakh. How much will I put for each portion? Half, no. So 50,000 for let out property, 50,000 for self-occupied property. Self-occupied property interest is well within 2 lakhs, fully allowed. So what's your net IFHP now? I will get 65,500 for the let out portion, 50,000 for the self-occupied portion. So what's your net IFHP? 15,500 becomes your net IFHP, and this number I will take to my main answer. So IFHP 65,500, working note number 7. 65,500. Are we done? Are we following? I hope you are with me. This was your IFHP computation. Then come one final adjustment we have. Mr. Anand deposited 1,30,000 in PPF. PPF will go to which section? 80C. So coming back to my chapter 6A, I already have over here 80D of 23,000. I have 80QQB of 2,10,000, and now they're talking about 80C. So section 80C, here we have PPF how much? 1,30,000. Then the question says he put 80,000 rupees in 5-year term deposit in the name of his minor son Aman. What to do about this? 5-year term deposit with section. I'll remind you of the provision. I'll give you one small equation here. Listen. See, if assessee makes a 5-year FD or a 5 years time deposit or a 5-year term deposit or tax saver deposit, okay, where should this deposit be? This deposit should be either in a bank or in a post office. Then this deposit should be in whose name? It should be in assessee's own name. If all these conditions are fulfilled, only then assessee will get 80C deduction. Here tell me, did assessee make a 5 years FD? Yes, he made a 5 years FD. Is it in a bank or in a post office? The question doesn't say where. Question says 5 year term deposit in the name of minor son. We don't know where. I'll assume it is bank or post office. But tell me, is it in assessee's own name? It is not in assessee's own name. It is in assessee's minor son's name. So therefore, no 80C guys. You will get 80C deduction only if the FD is in your own name. Here it is not in assessee's own name. Therefore, you will not get any 80C deduction for this FD. That's it guys. So now we can go and start closing our answer. PGBP is how much? 35 lakhs. No other adjustment we have. So PGBP 35 lakhs. Total IFOS is 249,750. 38 lakh 59,825. Okay. Now from this we will subtract our chapter 6A. But before we subtract chapter 6A, what do we always check? Splitting of income. I have special rate income over here. I have 112A LTCG over here. I do have special rate income. So therefore I will split my GTI into 2 parts. I will split it into normal rate income and special rate income. Only one special rate income I'm having, 94,575. So what's my normal rate income? 37,65,250. Now I'll subtract chapter 6A. Give reference to working note number 5. Come to working note number 5. See, here we have 80D 23,000. We have 80QQB 2,10,000. 80C, they tried to confuse us by giving us 2 numbers, but we know better. We know that 5-year FD, I will get 80C deduction only if it is in assessee's own name. Here it is in minor son's name, therefore no 80C deduction for the FD. So 1,30,000 only we will have in 80C. 1,30,000 guys, it is well within the limit of 1,50,000. So what's your total chapter 6A? 23,000 plus 2,10,000 plus 1,30,000. Total chapter 6A is going to be 3,63,000. Huh? Take this to your main answer. Total chapter 6A 3,63,000. Then we also have 10AA. That also I will subtract over here. What's your 10AA tax holiday? Working note number 2. We've already done the computation. 10AA was 10,50,000. So what's your net number now? 23,52,250, and your special rate income is 94,575. So assessee's total income will be 24,46,825, which I will remember to round off to the nearest multiple of 10, 24,46,830. Sorted. So this was your total income computation in normal regime. Now we will start off with our tax computation. So tax computation as per which regime? We are doing as per the normal regime. Assessee is not a senior citizen. Basic exemption limit will be 2,50,000 only. But here, guys, I think we made a small mistake. Housing loan principal repayment I forgot to take over here. We have housing loan principal repayment of 1,05,000, right? Loan is borrowed for construction of the property. Then the lender is bank over here. It is a residential property assessed under IFHP. We should be getting principal repayment ATC. Totally skipped my mind. I'm so sorry. Please do the rectification. We are having housing loan principal repayment. How much? 1,05,000. So my total ATC over here will be 2,35,000, which I will restrict to 1,50,000. So by 20,000 rupees, all our numbers will change. So my total chapter 6A will be 23,000 plus 2,10,000 plus 1,50,000, which will be 3,83,000. Have you rectified? Housing loan principal repayment, guys, totally forgot. This will go under ATC. Why? Because assessee is borrowing a housing loan from a bank for purchase or construction of a property. What kind of a property? A residential property assessed under IFHP. Therefore, I will get ATC. But total ATC was 2,35,000, which I remember to restrict to 1,50,000. So accordingly, rectify your answer. So your IFHP, your chapter 6A is going to be 3,83,000, your chapter 6A. So your normal rate, net normal rate income is going to be 23,32,250. And now your total income will be the correct number 24,26,825, which you will remember to round off to the nearest multiple of 10, which is 24,26,830. Are we done? Now come on, let's start off with a tax computation. So we will first do basic tax, but please keep in mind we have a special rate income over here. We have 112A LTCG. So I'll draw two columns, okay? I'll draw one column for my normal computation, normal income, and one column for 112A LTCG. Alright, so what's your normal income? Normal income is 23,32,250 and 112 LTCG is 94,580. So 23,32,250. On this we have to find our basic tax. My basic exemption limit is 2,50,000. Where do we always adjust it first? Against normal rate income. Do we still have any basic exemption limit left to adjust over here? No. Fully it is exhausted. I don't have unutilized basic exemption limit. Now come on guys, normal tax computation. So basic tax I'm computing on the basis of slab rate first. 23,32,250. So up to 2,50,000. 0. Then 2,50,000 to 5 lakh. On that 5 lakh 5%. 12,500. Then 5 lakh to 10 lakh. On that 5 lakh, 20%, which is 1 lakh. And then above 10 lakh, what's my income? 13 lakh 32,250. On that 30% tax, 399,675. So your total basic tax for the normal income will be 5,12,175. What about 112 ALTCG? Here you will remember to give some exemption. 112A, you get 1,25,000 exemption. So full 1,25,000 exemption you will enjoy. So net number will be 0 over here. So tax on 0 will be 0. Okay. So what's your total basic tax? 5,12,175. No 87A rebate because my income is clearly more than 5 lakhs. So no 87A rebate. Also no surcharge because income is within 50 lakhs. So straight away I'll add says over here. That's going to be 20487. So 532662 will be your tax liability. They did not ask for tax payable, so I will not bother about TDS, TCS credit and all. This is a tax liability which I will remember to round off to the nearest multiple of 10, which is 532,660. Normal income tax computation is not complete till you think about AMT. But question says ignore AMT, so therefore I am ignoring AMT. Done till here? Are you with me? Are you following? Yes. Now come on. This was under normal regime. Now we'll have to do as per default regime. So total income as per the default regime next. We won't recompute all over again, of course. We will just take the total income as per the normal regime and we'll play with that number. So what's the total income as per normal regime? 26,825. Now go working note by working note and make the changes. PGBP head, no change. 10AA. Tell me, will you enjoy 10AA tax holiday in the default regime? No guys, you don't get 10AA tax holiday. So I will reverse it. I will add it back. How much was it? 10,50,000. I'll add it back. Then anything else to be changed? Capital gains won't impact. Chapter 6A. 80D you will not get. 80QQB you will not get. 80C you will not get. So whole chapter 6 I will reverse. You tell me guys, if a SESI follows default regime, how many sections in chapter 6A SESI can enjoy? Only 3 no. 80JJAA, 80CCD subsection 2 and CCH subsection 2. Here it is none of the 3 sections. So the whole 3,83,000 I will reverse. So chapter 6A, 3,83,000 fully I am reversing. Then self-occupied property. Self-occupied property is always 0 in default regime. But here we have subtracted interest. How much interest we have subtracted? See, for self-occupied property, 50,000 guys. This 50,000 I will reverse. I will add back. I hope you are aware of this. Let out property, no change in default regime. Self-occupied property should always be 0 in default regime. But here I have a negative 50,000. So I am reversing that 50,000 by adding it back. So self-occupied property interest 50,000. I am adding back. That's all. So I am getting 39,09,825, which you will round off to 39,09,830. Now come on guys, we just have to do tax liability as per the default regime. So default regime, what's your basic exemption limit? 4 lakhs. Please do not forget, we still have a special rate income. What is our special rate income? We still have that. This 94,575 of 112, we still have that in our default regime as well. So here also I will have 2 columns. One column will be for my normal rate income and one column will be for my 112A LTCG. So let's do the computation. What's your total income number? Total income is 39,09,830, but put your 112A on in the other column first. 94,580 is 112A. 38,15,250 will be your normal income. Guys, are you understanding this 112A point? So basically, see, in total income for default regime, I started with total income as per normal regime, right? 24, 26, 825. This total income as per normal regime, 24, 26, 825 includes 112A LTCG, right? 94, 575. Therefore, that same 112A LTCG will be a part of my tax computation for default regime as well. So this is a part of my total income in default regime as well, just showing you that. Okay, now again, basic exemption limit fully you will adjust against normal regime itself, full 4 lakhs. You don't have any unutilized basic exemption limit, so straight away you can start doing your basic tax computation simply on the basis of slab rate. So this is slab rate as per default regime, so please be careful. How do you start? What's your basic exemption limit? Basic exemption limit is 4 lakhs. So 0 to 4 lakh, 0. 4 lakh to 8 lakh. On that 4 lakh at 5%, that's going to be 20,000. Then 8 lakh to 12 lakh. On that 4 lakh at 10%, that's going to be 40,000. Then 12 lakh to 16 lakh. On that 4 lakh at 15%, that's 60,000. Then 16 lakh to 20 lakh. On that 4 lakh at 20%, which is 80,000. Then 20 lakh to 24 lakh, 4 lakh into 25%, which is 1 lakh. Then above 24 lakh, how much are you having? 39,09,830 minus 24 lakh. This is going to be 15,09,830. This into 30%, that is 452,949. So your total basic tax liability will be 7,52,949. This is as per your default regime. Above 24 lakh, my income will be 38,15,250 minus 24 lakh. It's going to be 14,15,250. This into 30%. That's going to be 424,575. So your total basic tax as per the default regime or normal income is 724,575. Then 112A LTCG, here again you will get your 1,25,000 exemption. So because you're getting an exemption over here, your tax will be 0. Okay, so what's your total basic tax under 112A plus normal income put together? 724,575. Will you get rebate over here? No, income is more than 12 lakhs. No surcharge. Straight away you will add cess at 4%. 28,983 surcharge. So your total tax liability will be 753,558, which I will round off to 753,560. Okay, so now if I have to give you my conclusion, if I follow the normal regime, see here they're not asking which is more beneficial. They're just asking you to compute as per default regime, as per normal regime. Actually we're supposed to conclude over here, we're supposed to stop over here, but just for the sake of our discussion, if I follow normal regime, what's my tax liability? 532,660. And if I follow the default regime, what's my tax liability? 753,560. So here which is more beneficial? In this question, clearly your normal regime is more beneficial because only 532,660. Okay, now giving you one small clarification over here, your 112A LTCG, if you see, it's actually 94,575. But why did I write 94,580 over here? There was a reason. Because my Total income is 24,26,830. If I write the normal income of 23,32,250 here, and if I write 94,575 over here, it will not match, because the total over here has to be same as this total. So basically we're rounding off, right? So that is why I'm rounding off this 112 LTCG number as well, because my total income, this has to be split between normal income and 112 LTCG. So it is correct. It is 90. It's supposed to be 94,580 only, because if you write 94,575, then your total income will not tally. Okay, so what were your learnings in this question, guys? Come on, let's revise. Our first big learning in this question was 10AA tax holiday. Okay, that in case you had some confusion, I'm hoping it is sorted. Then according to me, the best part of this question was this situation where even though it was long-term capital asset, even though it was 112A, still remember, for SAM Limited shares, grandfather clause did not apply because date of acquisition was on or after. Date of acquisition was after 31st Jan 2018. Grandfather clause did not apply. That was our highlight of this question. Then STT can't be expense on transfer in capital gains we saw. Any other learning, guys? Lump sum medical insurance premium you already know. Royalty was a good adjustment over here. ATQQB, all the three adjustments were there. I will first restrict it to 15%. Then if it is earned from outside India, it has to be realized into India within 6 months from the end of the year, and then I'll subtract the expense. Whatever number I get, I'll compare with 3 lakh. Whichever is lesser will become my ATQQB deduction. Then interest on income tax refund, IFO was said. Then IFHP computation was fine. PPF ATC was fine. This 5-year term deposit was interesting. Even though it's a 5-year term deposit, still no ATC. Why? No ATC because it is not in assessee's own name. It is in minor son's name. Therefore, no ATC. And this principal repayment, for principal repayment, we had to give ATC deduction. Alright, that's it, guys. This was a good question. It was like a mind-boggling question, especially with 10AA also involved. ATQQB also involved. Can you imagine how complicated it would have been if they had asked for AMT also? AMT is definitely applicable over here. We're having 10AA, we're having ATQQB, right? So AMT is definitely applicable over here. Good thing they said ignore AMT, otherwise answer would have become never ending. But AMT, don't worry, guys, we have another question where we will anyways have a look at that. Alright, can I close this subdivision? Can we go forward? Can we come to question number 23 next? Yes. Our next question now, question number 23. Again, a total income question. But this is slightly different, okay? You will understand how different is it. Let's read the question first. The question says, Mr. Pramod, a resident aged 55 years. First, what will you conclude at this stage? That Mr. Pramod, you are not a senior citizen, okay? He is a retail trader. He furnished the following information. P&L account they have given to us. 9 adjustments they have given to us. Look at this. This is the best thing about this entire question. Look at this. What I'll do is, I'll take a screenshot and I will discuss this with you in my classroom notes straight away. Look at this, okay? They're asking us to compute total income in 3 ways. So 3 answers we have to give for total income, and we have to say which is the best. In the first method, business profit is computed as per normal provisions and he opts for 115 BSE. Does this sound weird to you? It sounds weird to me because normal provisions means normal regime. 115 BSE means default regime. How is both possible? I'm not understanding. Let's go to the second subdivision. He opts to compute business profit under presumptive taxation. So presumptive taxation under 44 AD and does not opt for 115 BSE. This is simple. So here what I have to do is, as per 44 AD I have to compute and I have to follow the normal regime, basically no 115 BSE. This is clear. Then comes the third subdivision. Business profit is computed as per normal provisions of Income Tax Act and he does not opt for 115 BSE, which means normal computation. Normal computation over here they mean no 44 AD and does not opt for 115 BSE. Does not opt for 115 BSE means normal regime. This is going to be my third bucket. So now come to the first bucket and try to interpret. Business profit is as per normal provisions and he opts for 115 BSE. So here what is normal provision means? this. We have to do the computation as per the normal computation, which means not 4480, and then we have to follow 115 BSE. Understood? You understood why I picked this question? For this reason only, for us to understand that in which situation we have to follow which method. You're getting my point? So in the first situation, without 4480 as per normal computation but default regime. Second method is presumptive taxation 4480 in normal regime. Third is again normal without 4480 in normal regime. So 3 answers we have to give, and we have to pick which is the most beneficial. Okay, are you ready? Come on, let's see what exactly the question says. Question number 23. So the question is saying compute total income and tax payable, both. Total income and tax payable we have to compute. In all the 3 situations we have to compute. Which option is advantageous to Mr. Pramod? Which is the most beneficial we have to pick. So what is the first thing they are saying? Normal computation without 115 BSE. We'll do it part by part, okay? So our first computation, we should not be doing 4480. So we will be doing the computation as per the normal provisions of PGBP, but we will be following 115 BSE. So without presumptive taxation in default regime, in simple words. Let's start our computation. So first we'll do total income, and then we'll do tax payable. So in total income, they have given me the P&L account, they have given me the net profit number. So of course I will have PGBP. Let's give reference to working note number 1. So I'll open working note number 1 for PGBP. See, had it been 4480, I will not even open a PGBP working note. Straight away 6%, 8%, I will compute and I will close. But here, without 4480, as per normal provisions they are asking, therefore full-fledged PGBP working note I will do. So I have the net profit number of 10,46,000. Now let's look at the credit side one by one. Sales, closing stock, nothing to do. Gross profit, nothing to do. What about rent from house property? Rent from house property will go into my IFHP head. I have to remove this from my PGBP head. How will you remove a credit? By subtracting it. So I'll remove rent relating to house property, 1,80,000. I will take it into my IFHP head. So IFHP working note number 2. But IFHP working note we will do later, because I need municipal value, fair rent. I need all that information. So I'll do it later. Then rent from furniture. This has to go to IFOS head. So how do I remove a credit from my P&L? By debiting it, by subtracting it. So here less rent relating to furniture, amount is 1,20,000. I am removing it from P&L account and I am taking it to which head of income? IFOS head of income. So come to your main answer, IFOS. Give reference to working note number 2. So after PGBP, I'll open working note number 2, IFOS. Here I am having rent relating to furniture. The amount is 1,20,000. This is simple. Now come to the debit side. Opening stock, purchases, transport charges, gross profit, salaries, rates and taxes, admin expenses, depreciation, nothing to do. Then the question says all the sales are by account payee check. Okay. Then opening and closing stock have been overvalued by 15,000 and 20,000 respectively. Tell me, what do you do with opening stock overvaluation? Opening stock overvalued, you add the difference. So opening stock is overvalued by 15,000 rupees. You remember guys, I'm not sure if you've seen, but in multiple videos in the past, I've often told you all that opening stock overvalued, you add the difference. So naturally closing stock overvalued, obviously what will you do? You will subtract the difference. So obviously opening stock undervalued, what will you do? You will subtract the difference, and closing stock undervalued you will add. So if you remember one number, if you remember this, that opening stock overvalued has to be added. If you remember this add, if you remember this alone, your entire table you will be able to make. So opening stock overvalued, the amount is 15,000. I am adding the difference, opening stock overvalued add. Then closing stock is also overvalued. What about that now? Closing stock overvalued, what to do? I will subtract the difference. So less closing stock overvalued, 20,000 rupees. Okay, then what comes next? Rates and taxes. Remember we have rates and taxes over here, 24,000. This rates and taxes includes GST liability of 5,000. paid on 1st May 26. Tell me till here. Which section are they trying to apply over here? Which section are they trying to apply? They're saying GST liability 5,000 rupees paid on 1st May 26. They're trying to apply section 43B. 43B says payment has to be made within 139 bund date. Come on guys, tax, duty, cess or fee. It is covered by 43B. Payment has to be made within 139 bund date. Payment is made on 1st May 2026 itself. Payment is definitely made within 139 bund date. Therefore, it will be allowed. It's already debited in the P&L account. There's nothing left for me to do. Then rates and taxes includes municipal tax for let-out property 7,000. What about this? This has to go into my IFHP head. Municipal tax for let-out property, it has to go into IFHP head. How will I remove it from my PGBP? It is already debited in rates and taxes. How will you reverse a debit? By crediting it. So you will add it back. Municipal tax relating to house property, the amount is 7,000 rupees. This is done. Then comes your next adjustment, your fourth adjustment. Admin expenses includes 25,000 paid as donation to National Children's Fund. Step by step, what should I do in my PGBP head? I have admin expenses over here, that is including 25,000 paid to National Children's Fund. It's not a business expense. It should not be debited to P&L, but it is debited to P&L, guys. So how will you reverse a debit? You will reverse a debit by crediting it. So I'll add back donation to National Children's Fund, which is debited to my which is debited to my P&L. I am adding it back 25,000, but I will get a deduction under which section? National Children's Fund. I will get a deduction under section 80G. But guys, we are computing right now under which regime? We are computing right now under 115 BSE. In 115 BSE, do you get to enjoy chapter 6A? Do you get to enjoy 80G? No. So therefore, that is the reason why I will not be claiming 80G now. But I will remember later when I do as per the normal regime, that time I have to remember to claim this 80G. Okay. Then what comes next? There's one more point over here. Payment of laptop, admin expenses is including payment for laptop purchased on 15th May 25 for 60,000 through bank transfer. Tell me guys, in admin expenses, can we debit laptop? Of course not. Laptop becomes a capital expense. It's a depreciable asset. You should be claiming depreciation on it. So I will reverse the laptop and I'll claim depreciation. So laptop, what is the amount? 60,000 rupees. It is paid through bank transfer. Is it okay for you? Yes. More than 10,000 payment has to be made in specified mode. Bank transfer is specified mode. So therefore it is eligible for depreciation now. Depreciation on laptop. What's the rate of depreciation? What's the rate of depreciation for laptop, computer, electronics, laptops and all is going to be 40% depreciation. So 60,000 into 40%. Then it was put to use when? It was purchased on 15th May 25. Let's say put to use on the same day. Definitely put to use for at least 180 days. I'll get full year's depreciation. And will I get additional depreciation over here, guys? No additional depreciation because of two reasons. Reason number one, 115 BAC I am computing. In 115 BAC, there is no additional depreciation. Second reason as I say is retail trader. Retail trader, no additional depreciation. So simply I will adjust my normal depreciation here, which is 24,000. This is also done. Then comes your fifth adjustment. Transport charges includes 30,000 paid in cash. Is it okay? See, 40A subsection 3. What does 40A subsection 3 say? 40A subsection 3 says that payment more than 10,000 has to be in specified mode, guys. But here it is transport charges. It is 30,000. It is more than 10,000. But however, I hope you recall when it comes to transport expense, when it comes to freight expense, what's your limit in 40A subsection 3? If you're making payment to a person for transport expense or for freight expense, for carriage expense, your limit is going to be 35,000. Here 30,000 only. Transport expense 30,000 only. It is within 35,000. So will there be any disallowance under 40A subsection 3? Under 40A subsection 3, there will be no disallowance over here. Got the point? Good adjustment. General limit is 10,000, but for transport expense, freight expense, carriage expense, limit is 35,000, and here it is well within 35,000, so no problem. Then he incurred a loss of 8,000 on sale of equity shares which were purchased on 10th June 2025. First of all, what kind of loss? Is it short-term capital loss or long-term capital loss? I purchased the shares on 10th June. I sold the shares on 10th February. It's definitely going to be Short term capital loss. What do you do with losses? Margin. Handle them later. So we have STCL here. 8,000 rupees STCL we are having. Okay. Then comes your next point. Depreciation includes 1,200 depreciation on trademark wrongly charged at 15%. Correctly tell me what's the correct depreciation rate for trademark. Trademark depreciation rate, intangible asset, correct depreciation rate is 25%, but we have claimed depreciation at 15%. So what will I do? I will reverse the 15% and I will claim 25%. So I will add back the depreciation on trademark, which is already debited to my P&L. How much is debited? They are saying 1,200. I will reverse it and then I will claim the correct depreciation on trademark. Now how to find? Did they give you the value of trademark over here? Come on everybody, put on your thinking caps. Basic street smartness I need over here. Did they give you the value of trademark? No, they are just saying 1,200 is depreciation on trademark, which is 15%. They've not given me the value of trademark, but it is easy to find. How? They've given me the 15% number. We claimed 15% depreciation. That was how much? That was 1,200 rupees. So what is 25% depreciation? Simple cross multiplication I can do. Right guys? So 15% number is 1,200. I've reversed it. Now what is 25%? Simple cross multiplication I will do. 1,200 into 25 by 15. How much will that be? That's going to be 2,000 rupees. That's your correct depreciation number. Easy this was. Then comes the next point. He deposited 50,000 in PPF account. Where will PPF account go to? ATC. So PPF 50,000 rupees he has deposited and life insurance premium 60,000 rupees. So both will go under ATC. 50,000 plus 60,000 total will be how much? Total will be 1,10,000. But right now I'll have to keep this pending because right now we're doing as per default regime. Default regime you can't enjoy chapter 6A. Later when we come to normal regime, that time we will enjoy this ATC. Okay. Then the question says he paid interest of 70,000 rupees loan availed in 2021 for higher education of his wife. Come on everybody, interest on education loan, which section? Interest on education loan, section 80E. Section 80E says it should not be school education, it should be higher education. Yes, it is higher education over here. It is clearly mentioned. The student is wife. Is it okay? The student can be assessee, spouse, children or any other person for whom assessee is guardian. So even spouse is okay. How much is the interest repayment? 70,000 rupees. 70,000 rupees you will get as a deduction under ATE. Even this for now I'll have to keep it pending. Later when I compute as per normal regime, that time I will take this number. Okay, that's it with the adjustments guys. Come on, let's close our answer. Give me the net number please. Give me the net PGBP number first. I am getting 8,08,200 PGBP. Take it to your main answer. Then IFHP we have to compute now. Give reference to working note number 3. So after working note number 2, I'll open working note number 3, IFHP. We have a let out property guys. We have rent how much? Rent from house property 1,80,000. So no GAV, no municipal value, no fair rent, no standard rent, nothing. So my GAV I will simply compute on the basis of the shortcut. GAV will be actual rent minus unrealized rent minus vacancy loss. So I'll take the actual rent as it is 1,80,000. Municipal tax paid is given in the question. See, we even highlighted and kept. Municipal tax is how much? 7,000 rupees. So your net annual value will be 1,73,000. Less deductions under section 24. Only standard deduction will have 30%, which is 51,900. We read the whole question. Did we have any interest for the housing loan? We did not have. So my net IFHP is going to be 1,21,100. So IFHP 1,21,100. What about IFOS? IFOS only one number we are having, 1,20,000. That's it. Quickly close. What's your GTI? 10 lakh 49,300 is your GTI. Do we have any chapter 6A? Guys, this is default regime. Only 3 sections chapter 6A is possible. Do we have 8JJA in the question? CCD subsection 2, CCH subsection 2? No. So therefore this itself becomes a total income. It's already in multiples of 10. No need of any rounding off also. Now they also asked for tax computation. So let's begin. Tax computation, which regime are we doing as per? Right now whole computation is as per default regime. So default regime, and what's your basic exemption limit in default regime? 4 lakh rupees basic exemption limit. Do we have any special rate income? We don't have any special rate income. STCL we have. STCL we can adjust only against STCG, LTCG. I don't have any STCG, LTCG. I am simply going to carry forward this loss. Okay. So come to the tax computation now. No special rate income. Straight away I can do the tax on the basis of slab rate. So basic tax 0 to 4 lakh 0. 4 lakh to 8 lakh. On that 4 lakh 5% tax. That's going to be 20,000. Then 8 lakh to 12 lakh. We are in that range only. So 8 lakh to 1049,300. That is 249,300 into 10%. 24,930. So 44,930 is your basic tax. Then after basic tax, no straight away says. What do we think about first? Come on, sequence. We first think about 87A rebate. Will I get 87A rebate? Assessee is an individual. Assessee is a resident. Total income is within 12 lakhs. Guys, default regime. It is within 12 lakhs. Maximum rebate you can enjoy 60,000. Here 44,930 you will be able to enjoy. So your net tax liability is going to be 0. Okay, this was our first subdivision. So we had done the entire interpretation, and we had concluded that 3 answers we have to give. Normal provisions, which means without 44AD in default regime. We are done with that. Now come to the second part. Second part as per 44AD in normal regime. Are you ready? That's going to be the second part of my answer. This time we have to apply 44AD and we have to compute as per the normal regime. We'll go step by step. Okay. First of all, my PGBP number will change, guys, because we have to compute as per 44AD. So as per 44AD, tell me, how do you compute PGBP? Sometimes 6% of the turnover, sometimes 8% of the turnover. So here the question says all the sales are by account payee check. See, in 44AD, how do you compute PGBP? Very simple. Whatever is your turnover, if it has been realized in specified mode within 139 one date, 6% of the turnover. If your turnover is not realized in specified mode, any other mode, then 8% of the turnover will become your PGBP. Here, question is clearly saying that the turnover is realized by account payee check. Is account payee check a specified mode for you? It is specified mode. So turnover is realized by specified mode. Therefore, what will be your percentage for computing 44AD? 6%, guys. So what is your turnover in the question? Turnover is 70 lakh 80,000. So 70 lakh 80,000 into 6%. How much will that be? 4,24,800. I hope you are aware of the fact that if I follow 44AD, then I don't have any other allowance, any other disallowance. So all your PGBP adjustments, dustbin, no allowances, no disallowances, straight away 6% of turnover became my PGBP. But same turnover, if we did not realize in specified mode, then it would have become 8% of turnover. But here we realized in specified mode, therefore 6% of turnover. Then after this, what's your next head of income? Remaining head of income will remain the same. IFHP I have 121,100. The number won't change because whether normal regime, whether default regime, let out property answer doesn't change. Then IFOS also will not have any impact. I'll take the same number. IFOS 1,20,000. So what's your GTI now? $665,900. But this time you're computing as per the normal regime. So this time you will get chapter 6A also. Chapter 6A, we have already identified the sections and we have kept ATG 25,000, your National Children's Fund 25. By the way, National Children's Fund is which category in ATG? Is it category A 100%, category B 50%, or category C, category D? Which category? National Children's Fund is category A, guys, 100% deduction. So whole 25,000 fully I'm allowing. Okay. Then ATC is how much? 1,10,000. Well, within 1,50,000. And then we have ATE of 70,000. So what's your total income? We are computing as per 44AD in normal regime. So your total income is going to be 460,900. So in my first computation here also STCL I was carrying forward. In this 44AD computation here also STCL I will carry forward, because STCL I can adjust only against STCG, LTCG, and I don't have any STCG or LTCG. So now come on. Compute tax now. This was total income computation. Now compute tax. Which regime are you following? Normal regime. Basic exemption limit is 2,50,000. I don't have any special rate income. So straight away I can compute tax. Basic tax 0 to 2,50,000, 0. Then I am in the 2,50,000 to 5 lakh range. So 2,50,000 to 460,900. How much income am I having in this range? 2,10,900 on this 5% tax. 10545. So total basic tax 10545. Now tell me. Straight away says no. Rebate. Assess is an individual. Assess is a resident. Normal regime, guys. Total income is within 5 lakhs. So you will enjoy rebate. Maximum rebate 12,500. Here how much rebate will you enjoy? 10545. So your tax liability becomes 0. So if your assessee does computation as per normal computation of PGBP and in default regime, then also tax liability is 0. If assessee follows presumptive taxation in the normal regime, then also tax liability is 0. So can I say now we are done with our first two computations? Now one final computation, guys, where I take normal PGBP computation, no 44AD, normal PGBP computation, and regime also normal regime. Let's do this now. That's going to be the third part, the final part of the question, where my PGBP will be normal PGBP provisions and not 44AD, and I have to follow the normal regime. Now tell me. So I have to take PGBP as per normal computation, which I already calculated for you. Our PGBP as per normal computation was 8,08,200. Then we have IFHP and we have IFOS. Those numbers and all did not change. IFHP and IFOS, I'll take the numbers 121,100 and 1,20,000. Our usual IFHP number and IFOS numbers, these numbers are not changing despite change of regime. In this question, these numbers have not changed. So what's your GTI? $1049,300 minus chapter 6A. Same chapter 6A which we did earlier. Three sections we had. We had section ATG, ATC and ATE. ATG, remember, National Children's Fund, we had 25,000. ATC we were having 1,10,000 and ATE we were having 70,000. Same numbers, guys, 25,000, 1,10,000 and 70,000. So what's your net total income now? 8,44,300. Please tell me, are you getting the same number? Now on this compute tax, which regime? Normal regime, basic exemption limit is 2,50,000. So only normal income I'm having. Compute basic tax, please. I'm getting 81,360. I hope you're getting the same. Yes, here no rebate because income is more than 5 lakhs. So straight away I'll add cess at 4%. 84614, which you will round off to 84610. Done. So we are done with all the three computations. They asked us which is the most beneficial for us. Let's do a summary now. We have three numbers. We have normal PGBP, that is without 44 AD, following default regime. In this situation, what was our tax liability? First situation, guys, it was 0. We didn't have to pay any tax. Then, in our second situation, for PGBP, we followed 44 AD. That's how we computed PGBP. And we followed normal regime. Here also our tax liability was 0. Remember? Second situation, here also tax liability was 0. Then comes the third situation where we did normal PGBP computation. Basically, we did not apply 44 AD and we computed as per normal regime. Here our tax liability is 84,610. Now they are asking us which is the most beneficial. What will you say? You do your thinking first and then I'll tell you what is my thinking. We have 0 and 0, but only one of the two only we can pick. Which is better? What would be your point of view? I'll tell you what is my point of view. Even this is 0, even this is 0. So definitely option 3 is out of the picture. So either option 1 or option 2. But out of these two options, which option? I'll tell you what is my method of thinking. If my SSC doesn't follow 4480, 4480 is applicable. But if you don't follow 4480, then consequences will come into the picture. You will have to maintain books of accounts. You will have to get books of accounts audited. Advance tax, all 4 installments you'll have to pay. 4480 subsection 4, those consequences will apply. But if I follow 4480, on the other hand, I get benefits only I get. What benefits I get? I don't have to maintain books of accounts. I don't have to get books of accounts audited. Advance tax I can pay in the last installment only. So according to me, the second option will be the most beneficial for the assessee, because if assessee follows presumptive taxation, not only is tax liability 0, assessee is getting other benefits also. What are the other benefits? Assessee does not have to maintain books of accounts in 44AA. Then assessee does not have to get books of accounts audited under 44AB. Then advance tax assessee has to pay, but entire advance tax assessee has to pay in the 4th installment only. So in the second situation, if you see, not only is tax liability 0, other benefits also assessee is getting. So therefore, which is the most beneficial? The second situation, the second method of computation will become the most beneficial for my assessee. You got the point, everybody? Yes, it was a very interesting question. This whole 4480 angle we have seen in this question along with the different regimes. Can I close this question over here? Let's come to our next question now. This question over here, question number 26. Let's read the question. The question says, Mr. Sunil, aged 48 years. What will you conclude at this stage? That Mr. Sunil, you are not a senior citizen. Right? He has furnished the following particulars for the year ended 31st March 26. They have given us 7 set of points over here. You are required to compute total income and tax liability, both they are asking. Under default regime, I wanted to change the question. I wanted to give you AMT practice in this question. That is why I've changed the question over here. We will do as per default regime also, as per normal regime also, so that we can get some AMT practice. Total income and tax liability, both. Are you ready? Come on guys, let's begin. I'll start with my total income computation as per normal regime. Let's begin. Our first subdivision. He occupies ground floor of his residential building. He occupies, which means what kind of property? This is going to be a self-occupied property. And he has let out the first floor. So self-occupied let out property, both we are having. For residential use, annual rent is 2,95,000. He paid municipal tax of 25,000 for the current financial year. Both floors are of equal size. As per interest certificate from HDFC Bank, he paid 1,50,000 as interest and 80,000 towards principal repayment of housing loan for the above building. With this information, we can finish off IFHP. So IFHP, give reference to working note number 1. Let's open working note number 1, IFHP. How many kinds of units am I having over here? 2 types of units, guys. I am having let out unit also, and I am having self-occupied unit also. 2 floors, 1 floor is self-occupied and 1 floor is let out. My assessee owns a property for how many months? Does the question say assessee sold the property in between the year or purchased a property in between the year? No. So he owns a property for all 12 months. So my computation will be for all 12 months over here. So I will start with GAV, municipal value, fair rent, standard rent. Nothing is given to me. Therefore, I will apply my shortcut number, guys. What's my shortcut? Actual rent minus unrealized rent minus vacancy loss. What's our actual rent? 2,95,000. Then from this, we will subtract municipal tax paid. Light bulb moment incoming. Be aware. Municipal tax is 25,000. Can I take it as it is fully? No. 25,000 will be for the entire property. We're doing only for 1 floor, only for the let out unit. So only half I will take. 12,500. So what's your net annual value now? Net annual value will be 282,500. Now this is where your self-occupied property will enter into the story. Self-occupied property answer will be 0. NAV will be 0. Okay. Then we will have deductions under section 24. Number 1, we'll have standard deduction 30%. That's going to be 84,750. Then interest. How much was the interest? As per interest certificate, interest is 1,50,000. I will split 1,50,000 between both the floors. So 75,000, 75,000. Let out property, no limit on interest. Self-occupied property, interest has to be within 2 lakhs, and it is within 2 lakhs over here. So what's your net IFHP number as of now? 1,22,750. And for self-occupied unit, 75,000. So what's your net IFHP? 47,750 becomes your net IFHP, which you will take to your main answer. Okay. Then what about the principal repayment? 80,000 principal repayment. I will go to section ATC. Why ATC? Housing loan principal repayment. Why did you borrow the loan? The question says he borrowed the loan for, the question just says he borrowed the loan for the above residential building. We'll say it is for purchase or construction. Who is a lender over here? Lender is a bank. Bank lender is allowed. Therefore, I will get a deduction under ATC. So I'll open my chapter 6A, working note number 2. Chapter 6A. Here we will have section ATC, 80,000 rupees. Okay, this is also done. Then comes a third adjustment. He owns an industrial undertaking established in an SEZ, which had commenced operation in 1920. 1920 they commenced operation. Then total turnover was 400 lakhs, which includes 150 lakhs from export turnover. Be careful. Out of 150 lakhs export turnover, only 120 lakhs has been received in India in convertible foreign exchange on or before 30th September 2026. Industrial undertaking fulfills all conditions of 10AA. Profit from the industry is 40 lakhs. What should I do? 10AA. Okay, something else also I should do. I should put the net profit into my PGBP first. So come to your main answer. PGBP. Give reference to working note number 3. So after my chapter 6A, I'll open working note number 3 PGBP. What is our net profit from the SEZ unit? It is 40 lakh rupees. Okay. Now after this, I will start our 10AA computation. So I'll open working note number 4 for section 10AA. How to compute? We don't have to check the conditions because question itself says all the conditions of 10AA are fulfilled. So we don't have to check the conditions. So which year are we in? Tell me. Right now we are in previous year 25-26. But when did we start this unit? In 2019-20. So if I subtract 1920, what will I actually get? 6th year. But remember, just in the last question only I told you, we always add a 1. Why? Even the year in which we commenced business, even that year is eligible for 10AA. So right now we are in which year? Right now we are in the 7th year. 7th year means how much deduction I will get? Had I been in the first 5 years, 100%. I am in the next 5 years, so 50% deduction I will get. Okay. Then what's your formula? 10AA tax holiday will be net profit or PGBP of the SEZ unit into export turnover by total turnover into 50%. Right? So what's your net profit number? This SEZ unit, net profit is 40 lakhs into what is your export turnover? This is a little tricky over here. Total export turnover is 150 lakhs. 150 lakhs export turnover. But remember I told you in the last question I told you, out of export turnover, we take only that part of the export turnover which is actually realized and brought into India within 6 months from the end of the year. So even though my export turnover here is 150 lakhs, only 120 lakhs has been received in India within 30th September 26. So even though export turnover is 150 lakhs, which number you will take? Only 120 lakhs you will take. What's the total turnover? Total turnover is 400 lakhs into 50%. That's all, easy. 40 lakh into 120 by 400. This is going to be 6 lakh rupees. This is your 10AA tax holiday. Did you understand? Especially the export turnover point you understood, right? Export turnover, I have to take only that part of the export turnover which I have brought into India within 6 months from the end of the year. Okay. Then come to the next adjustment. 80JJAA. He employed 20 new employees for the said industrial undertaking during the previous year 25-26. Total 20 employees. Out of 20 employees, 12 were employed on 1st May. 1st May means how many days have they worked for me? Do you remember first of all? In 80JJAA, employees should work for me for minimum how many days? Minimum to 40 days. Here, by the way, if it is apparel sector, leather sector, footwear sector, then 150 days is enough. Otherwise, 240 days. Here, assessee has employed them on 1st May 2025, which means 11 months. 11 months means definitely they have worked for at least 240 days, guys. Monthly emolument is how much? Monthly emolument is 18,000. Great. Under 80JJAA, monthly salary has to be within how much? Monthly salary has to be within 25,000. And yes, it is within 25,000 over here. And remaining, basically total 20 employees we had hired, no? So this information is about 12 employees. So how many remaining employees I'm having? Remaining 8 employees I'm having. They were employed on 1st September 25. 1st September means how many months? September, October, November, December, Jan, Feb, March. 7 months only. Each month, let's say 30 days. So they have worked for us for 210 days only. Less than 240 days. So can I say that these 8 employees will become ineligible for 80JJAA? right? Because the employees have to work for me for at least 240 days, but these 8 employees, they have worked for only 210 days, which is less than 240 days. Therefore, second category of employees, no 80JJAA. Then the question says employees and all, they participate in RPF and they are paid emoluments directly to bank account. So come on guys, come to 80JJAA now. Section 80JJAA. Check whether the conditions are fulfilled. This much we have identified. For the 8 employees, no 80JJAA, it's only for 12 employees. For these 12 employees, you check the conditions. Did they work for at least 240 days for us? Yes, they worked. Is the salary within 25,000? Yes, salary is only 18,000. Then are we paying them salary in specified mode? Yes, question says salary is directly going into their bank account. Then are they participating in RPF? Yes, they are participating in RPF. All my conditions are fulfilled. So therefore, these 12 employees over here, they will be eligible for 80JJAA. Now, how do you compute 12 employees into slowly? How much salary are you giving them? You're giving them 18,000 salary. For how many months are you giving them? You hired them on 1st May 25. So for 11 months you will be giving them salary. This is the total salary you're giving to these 12 employees. Tell me what percentage. Under 80JJAA, whatever salary you give to these new employees, what percentage do you get a deduction under 80JJAA? 30%. That's all guys. So that's going to be how much? 7,12,800. This is going to be your 80JJAA deduction. 7,12,800. Got the number? Okay. So this was interesting. 80JJAA got revised for us. Now comes the next adjustment. He earned 30,000 and 40,000 as interest on savings bank deposit and FD. Where will this go? Which head of income? Savings bank interest, FD interest, all this will go into your IFOS working note. So I'll open a new working note now. Working note number 5, IFOS. So here we have savings bank interest and FD interest. 30,000 rupees and 40,000 rupees. Does something else also come to your mind? Savings interest, FD interest. Doesn't 80TTP, 80TTA, don't these sections come to your mind? But which section will apply over here? Assaji is not a senior citizen, guys. So therefore 80TTA only will apply over here. In 80TTA, only savings interest you will get a deduction. FD interest you will not get a deduction. So savings interest is 30,000. But 80TTA maximum how much you will enjoy? Maximum 10,000 only. So we don't have a working note for chapter 6. No, we have. So here we have section 80TTA. Actually savings interest is 30,000, but maximum 10,000 only we will allow. This was also okay. Then comes your 6th adjustment, your capital gains adjustment. He sold his vacant land. So asset is vacant land. He sold it for how much? On 1st December 25. This will become full value consideration. He sold on 1st December 25. This becomes your date of transfer. He sold for 16 lakhs. This becomes a full value consideration. Then stamp duty value at the time of transfer was 17 lakhs. Land was acquired by him on 15th October 98. This is the date of acquisition. It was acquired for 2,80,000. This is the cost of acquisition. FMV of the land on 1st April 2001 was 4,80,000. This is FMV on 1st April 2001. FMV. Then stamp duty value on the said date. So 4 lakhs is STV on 1st April 2001. He incurred registration expense of 12,000 at the time. So when he purchased the property, that time he paid 12,000 rupees when he purchased a property. Then stamp duty value they have given at the time of transfer also. 17 lakhs. This is STV at the time of transfer. So come on guys, let's begin. Capital gains working we will have over here. So working note number 6. Capital gains. We'll go step by step. What asset are we transferring first of all? What is our capital asset transferred? Our whole question is about vacant land. So capital asset is vacant land. Capital asset transferred is vacant land. Then what is the period of holding check? When did we buy this land? Date of acquisition, see. Date of acquisition is 15th October 1998. And what's the date of transfer? See, given here 1st December 2025. So we are clearly transferring after the amendment. After 23rd July 24, we are transferring. What will the relevant period of holding be? Immovable property, 24 months. This is more than 24 months, therefore long-term capital asset. Will 112 apply here or 112A will apply? See, 112 is only for listed equity shares and all. Here 112 will apply. Okay, so now I'll start off with my computation. Full value consideration. Does any adjustment come into your mind? They've given you STV at the time of transfer. So doesn't some adjustment come to your mind? 50C, guys. I will try section 50C. Let's try. Section 50C says the capital asset has to be land building both. Yes, it is land building both. Condition 2, STV has to be more than 110% of FEC. Tell me, what's the STV? STV is 17 lakhs over here. See, don't take this 4 lakhs. This 4 lakhs is STV on 1st April 2001, not this STV. Now, when we are transferring, what is the STV? 17 lakhs. Then what is 110% of FEC? So, your FEC number is 16 lakhs. 110% of 16 lakhs. 16 lakhs into 110% is going to be 17 lakh 60,000. Please tell me, is 17 lakhs more than 17 lakh 60? No, guys. So, therefore, 50C will not apply. Because 50C will not apply, I will stick to my actual FEC number only. I will take 16 lakhs only. Then we read the whole question. Did we have an expense on transfer? No. You cannot say registration expense because this registration expense is something which you have incurred at the time of purchase. Did you incur expense while transferring? No. So, there is no expense on transfer. So, what's your net consideration? 16 lakhs as it is will become your net consideration. Then from this I will subtract cost of acquisition. Guys, transfer is after the amendment. Will you do indexation and all? After amendment, no indexation. I'll take the cost of acquisition as it is. 2,80,000. Can I take it as it is? But I have to do some adjustments over here. Assessee has acquired the asset before 1st April 2001. So the cost of acquisition will get revised, right? So, date of acquisition is before 1st April 2001. See, we acquired the asset on 15th October 98. Before 1st April 2001. So, your cost of acquisition will get revised. What will your revised cost of acquisition be? We'll go step by step. What's your actual cost of acquisition? 2,80,000 plus how much registration expense? How much expense you incurred while purchasing? 12,000. I'll capitalize this. So, what's your total actual cost? 2,92,000. Then, what is FMV on 1st April 2001? Here see, FMV on 1st April 2001, 4,80,000. Generally, we say actual or FMV on 1st April 2001, we pick whichever is higher. But this is immovable property. So, we will also check STV on 1st April 2001, which is 4 lakh rupees. Now, carefully tell me, out of these two numbers, whichever is lesser, which is 4 lakhs, then out of these two numbers, you will pick whichever is higher, which is higher over here, 4 lakhs. So, this will become your revised cost of acquisition. Will you index the cost of acquisition? I will not index it because the transfer has happened after the amendment. So, I'll take 4 lakh rupees as my revised cost of acquisition. So, 12 lakh rupees. This becomes our section 112 LTCG. 12 lakh rupees. Sorted, guys. Yes, and then we have one final adjustment. He paid insurance premium 40,000 towards LIC of his son who is not dependent on him. Life insurance premium with section 80C. Is son also okay? Premium is for son. Yes, guys. We can pay life insurance premium for self, spouse or children. I can pay for children also. So, 40,000 rupees 80C. Come back to your chapter 6A. 80C we already had 80,000. Now we are having 40,000 also. So, total chapter 6A will become 1,20,000, which is well within 1,50,000. That's it, guys. Please, let's start closing our answer now. We have to do total income also, tax liability also, both the regimes we have to do. Are you ready? Before we start, 1 minute. Before we start, let's summarize what were our learnings in the question. That way, with contentment, we will be able to do the tax computation. What was the first big thing over here? IFSP was simple. In 10AA, one thing was interesting in 10AA. I'll tell you which thing. Remember that point of export turnover. 150 lakhs was export turnover, but only 120 lakhs was received in India within 6 months from the end of the year. So we did not take full 150 lakhs, we took only 120 lakhs. That was one big thing. Then whole of 80JJAA I will highlight. It's a very important adjustment from examination point of view, guys. 80JJAA. Capital gains, if you see, the cost of acquisition computation was interesting. We had registration expense of 12,000 rupees. We considered the registration expense. We incurred that expense while purchasing the property. Therefore, in my actual cost of acquisition, I added the registration expense. I capitalized the registration expense. That's how, even though my cost of acquisition was actually 2,80,000, I took 2,92,000. Okay. Now come guys, let's close the adjustments one by one. So we have IFHP 47,750. Then total chapter 6 says how much? 842,800. That's your total chapter 6. 842,800. Then PGPP, only one number we are having, 40 lakhs. No other number. Then 10AA we have 6 lakhs. Keep that in your mind. Total IFOS is 70,000. IFOS working note number 5. 70,000. And then we have 112 LTCG. Working note number 6. 12 lakhs. Any other income we have? No. So what is our assessee? GTI? 53,17,750 is our GTI. From this I will subtract. By the way, should I split my income? I do have special rate income. See, I have 112 LTCG of 12 lakhs. So I will split my income into normal income and special rate income. My special rate income is this 12 lakh rupees. So what's our balance normal rate income? 41 lakh 17,750. Now I'll subtract chapter 6. Working note number 2. How much is it? 8,42,800. Then I hope you haven't forgotten we had 10AA also in the question. Working note 4. 10AA was 6 lakh, I think. Yes, 6 lakh rupees 10AA. So find your total income number now. I am getting 38,74,950. Please check. Is your number and my number matching? Total income as per the normal regime, 38,74,950. It's already in multiples of 10. Therefore, no need of any rounding off. Now, come on. Let's start our tax computation. Which regime? Normal regime. Assessee is not a senior citizen and all. So, therefore, your basic exemption limit will be 2,50,000. Please be careful. We have special rate income. We have 112 LTCG over here. So I will draw 2 columns. One column for my normal income and one column for my 112 LTCG. Give me the numbers first. Normal income is 26,74,950. 112 LTCG is 12 lakhs. Now on normal income on the basis of slab rate, guys. Finish the slab rate computation first. By the way, My basic exemption limit is 2,50,000. You will fully utilize it against normal income itself. Do you still have any basic exemption limit left with you which you can adjust against 112 LTCG? No. No unutilized basic exemption limit over here. So finish the normal slab rate first. Check, do you get this number? The normal slab rate income, normal slab rate tax, 6,14,985. Now come to 112 LTCG. Are you ready for some drama? Assessee is having 112 LTCG. How will the computation be? Can I remind you of some provision? Listen to me. Working note number 7. Slowly. 112 LTCG, general tax rate is what? General tax rate 12.5%. But however, we have a special situation where we have 4 conditions. I'll tell you what the 4 conditions are. If those 4 conditions are fulfilled, then whatever LTCG you have computed without indexation on that 12.5% you will compute. Then you will recompute LTCG with indexation on that number 20% you will take. Out of these two numbers, whichever is lesser number will become your final tax liability. This is how your answer will be. General tax rate 12.5%, but I have 4 conditions. If those 4 conditions are fulfilled, then whatever is my LTCG without indexation, which I have already computed on that 12.5%, then I will recompute LTCG with indexation on that 20%. Out of these two numbers, whichever is lesser will become my tax liability. What are the 4 conditions? Condition number 1, assessee has to be resident, individual or HUF. Come on, tell me, fulfilled or not? Fulfilled. Condition number 2, capital asset has to be immovable property. Yes guys, it was immovable property over here, fulfilled. Condition number 3, date of acquisition has to be before 23rd July 24. Yes guys, remember assessee had acquired the property before 2001 itself. So definitely acquired before 23rd July 24. And condition number 4, date of transfer has to be on or after 23rd July 24. Even this condition is fulfilled. Our date of transfer was 1st December 2025. So all my numbers are fulfilled. All my conditions are fulfilled over here. Assessee is a resident, individual or HUF. Capital asset is immovable property over here. Date of acquisition is before the amendment and date of transfer is after the amendment. All my conditions are fulfilled. Therefore, this drama will apply over here. The general tax rate will not apply over here. Tell me, what is the LTCG which we have computed without indexation? The LTCG which we computed without indexation was 12 lakh rupees. On that 12 lakh rupees, what's the tax rate? 12.5%. Do I have any unutilized basic exemption limit which I can adjust over here? No, my basic exemption limit was fully utilized. So 12 lakh into 12.5% is going to be 1,50,000 rupees. Now are you ready? I have to recompute my capital gains with LTCG guys. So I'll do in my same working note. I will make a small note inside this working note itself. So I'm going to recompute LTCG with indexation. But please tell me, why are we doing this recomputation? For tax computation, only for tax. I want everybody to answer. When I recompute this LTCG, will my full value consideration number change? No. Will my expense on transfer number change? No. Will my net consideration number change? No. Even my cost of acquisition, only indexation I have to do. Will this 4 lakh number, do I have to recalculate this 4 lakh number all over again? Do I have to sit and check the revised cost of acquisition all over again? FMV on 1st April 2001, STV on 1st April 2001. Do I have to do the whole working out all over again? No guys, all my numbers will be the same. Only thing is I have to index this cost of acquisition. That's all guys. So I will start with my net consideration number. My net consideration was 16 lakhs. From this, I will subtract my indexed cost of acquisition. I am not going to calculate cost of acquisition all over again. That will still be the same only. 4 lakhs. I just have to index this number. Now see what numbers they've given to us in the question. Indexation of 376. Indexation of 2526 is 376 they have given. Divided by 100. Why 100? As it was acquired before 1st April 2001. Therefore, you will take the CII of 2001 too, which is 100. So 4 lakh into 376 by 100. 15 lakh 4,000 becomes your indexed cost of acquisition. So 96,000 is your LTCG with indexation. Tell me, will this number ever form part of your total income number? It is way lesser than the LTCG which you calculated, right? The LTCG which you calculated earlier was 12 lakh rupees. Now this is only 96,000 rupees. So will this number ever form part of your total income? Am I saying the number which you already calculated 12 lakh rupees or 96,000, whichever is lesser, will become your total income? No. Why did you do this computation? I gave you in the heading itself. Why did you do this computation? Only for the purpose of tax. So will this number ever form part of your total income? It will never ever form part of your total income. You computed this number only for the purpose of tax computation. So come on everybody, take this number to your main answer, 96,000. This is my LTCG with indexation on this 20% tax, which is going to be 19,200. Now out of these two numbers, which number will I have to take? I'll have to take whichever is a lesser number, which is 19,200. 19,200, this becomes my tax liability on 112 LTCG. Got the point everybody? Yes, general tax rate 12.5%. But because my 4 conditions were fulfilled, I computed LTCG without indexation, which I already computed on that 12.5%. Then I recomputed LTCG with indexation on that 20%. So I have two numbers now. Whichever is lesser number will become my tax liability on 112 LTCG. Can I give you one small tip over here, which you should always remember? Whenever you do this 4 conditions, if 4 conditions are fulfilled, whenever you do this computation, please keep in mind, if you have any unutilized basic exemption limit, please remember to adjust over here. In this question, do I have unutilized basic exemption limit? I don't have, right? It is fully adjusted against normal rate income itself. If I have unutilized basic exemption limit, you should not forget to adjust that against these numbers. So before you compute tax, if you have any unutilized basic exemption limit, you should adjust against these numbers. Then only you should compute tax. Okay. So 19,200, take this to your main answer. 19,200. This is my tax liability on 112 LTCG. Give reference to working note number 7. So let's continue now. What's our total basic tax? Total basic tax will be 614,985 plus 19,200, which will be 634,185. Okay, then will you have rebate? No income is more than 5 lakhs. No surcharge, income is within 50 lakhs. Straight away you will add cess at 4%, which is going to be 25,367, 659, 552 will become your tax liability, which you will round off to 659, 550. Till here done. I will say that the most interesting part till here was the way we computed 112 LTCG tax. I hope it's clear for you. 4 conditions are fulfilled. Because my 4 conditions are fulfilled, with indexation, without indexation, I did that drama. Whichever is lesser became my tax liability. Okay. Now normal regime. Tax computation is not complete till you think about AMT. So are you ready for AMT now? Yes, guys, come on, it's going to be an interesting question. This was the first part of our computation where we did as per normal slab rate and all. Now I'm going to recompute with AMT. But AMT, when will you have? How many conditions have to be fulfilled? Two conditions have to be fulfilled. Condition 1, assessee must have 10 AA or 35 AD or Chapter 6A Part C, at least one assessee must be having. Here assessee is having how many adjustments? Here assessee is having 10 AA also. Assessee is having Chapter 6A Part C also. Both assessee is having, remember, in Chapter 6A Part C, assessee is enjoying 80 AA. By the way, for the same business, assessee is claiming 10 AA also, 80 AA also. Is that okay? Yes, for the same business, you can claim these two deductions. It is okay. I'll tell you where there's a problem. For the same business, can you claim 35 AD and 10 AA? That you can't. For the same business, can you claim 35 AD and 80 AA? That you can't. So who is the problem maker? 35 AD is the problem maker. If 35 AD is there, you can't claim these two sections. But for the same business, can you claim 10 AA and 80 AA? The answer is yes. Like in this question, if you see, one second. In this question, if you see, assessee is having one business, if I remember correct. He's having one business, guys, this industrial undertaking. For this one business, he's claiming 10 AA also. For the same industrial undertaking, he's claiming 80 AA also. It is allowed. For the same business, you can claim 10 AA and 80 AA. It is allowed. Okay. Now come back. So because my assessee is having 10 AA and Chapter 6A Part C, condition 1 is fulfilled. Condition 2 is that total income has to be more than 20 lakhs. Not this total income which we already calculated. Not this total income. I have to recalculate. I'll tell you how to recalculate. I'll take the total income which I have already calculated. Okay. I will add back 10 AA. I will add back Chapter 6A Part C. I'll add back section 35 AD. Then on the 35 AD asset, I have to claim depreciation. This net number which I get, no, that will become total income for AMT. So what's the total income which I have already calculated? 38, 74, 950. Then we had 10 AA of 6 lakhs. How much was Chapter 6A Part C? Check please. We had 80 AA. The number was 7,12,800. Then we did not have 35 AD. So my total income for the purpose of AMT will be 51,87,750. Is it more than 20 lakhs? Yes. Both your conditions are fulfilled. Hence, welcome to AMT. Tell me, in AMT, how do you compute basic tax? Here I don't care. Special rate income, I don't care. Straight away, what percentage? Straight away, 18.5%. So whatever income you calculated over here, 18.5% of that will become your basic tax, which is going to be 959,734. Alright. Then come on. No 87A rebate because this is more than 5 lakhs. But this number is more than 50 lakhs. Therefore, what will come into the picture? Guys, when I'm computing AMT, my total income is 51,87,750. I will have surcharge. What will be a surcharge rate? More than 50 lakh up to 1 crore, what will be a surcharge rate? 10%. So 959,374 into 10%. That's going to be 959,773. Till here, are you getting the answer? Step by step I'm going. Are you getting the answer with me? So my basic tax is 959,734, 18.5%. Then surcharge is 10% of tax. So 95973. What's your total tax at this stage? 1055707. Okay. Now I will think about marginal relief. Marginal relief and small calculation I'll do over here. What will my imaginary total income be? I will see why are we having surcharge 10%? Because this number is more than 50 lakhs. So if my total income was exactly 50 lakhs, then in that case, what will the basic tax be for AMT? 50 lakh into 18.5%, that will be 9,25,000. Okay, so come on, what is my assessee's actual income? 51,87,750. For that much income, how much tax are we asking the assessee to pay? 10,55,707 we are asking him to pay. Okay, what is the imaginary income of the assessee over here? 50 lakhs. If 50 lakhs was the income, then how much tax will you ask your assessee to pay? 9,25,000. So how much extra income has your assessee earned? 187,750. For that extra income, how much extra tax are you asking your assessee to pay? 13707. So please tell me, in this case, will I have marginal relief? Yes or no? My difference in income is 187,750. My difference in tax is 13707. So will I have marginal relief? Here, my income is higher than my tax. Tax is lesser, income is high. So is anything unfair? When do you have marginal relief? Only if income is less and tax is high, then only you will have marginal relief. Here my income is higher and my tax is lesser, therefore will I have marginal relief? No marginal relief in this question. Are you following? When will I have marginal relief? If income was less and if tax was more. If tax is even more than income, then only you can complain. How can tax be more than income? You can complain then only. Here my income is more, tax is less only. No marginal relief in the question. That's it, guys. Add your cess now. Cess at 4%, which will be 42 to 28. $10,97,940 will become your AMT. Alright. Now give your conclusion. As per the normal regime, if you see, this is normal regime computation, normal regime conclusion. So what was your normal computation? Tax amount 659,550. AMT, what's your tax amount? 10,97,940. Which of the two do you have to pay? Normal or AMT, whichever is higher you have to pay. 10,97,940. This will become your final tax liability as per the normal regime. Okay, so because you're paying AMT, you will also have AMT credit over here. That's just for your reference. What's the difference between these two numbers? 438,390 will become your AMT credit. Alright, answer is not over. This is normal regime. Patience. We also have to do as per 115 BSc. So with this, we're done with our normal regime. Now come on, let's recompute as per 115 BSc. Total income as per 115 BSc. Will I recompute all over again? Chanceless. We will straight away take total income as per normal regime and we will play with that number. What's the total income as per normal regime? See, 38,74,950. Working note by working note we will go. IFHP head. I am having self-occupied property. Self-occupied property 115 BSc should be 0. No, here I am having 75,000. I'll reverse that. Self-occupied property, you can't subtract interest. You subtracted interest in normal regime. Default regime, I am reversing it. Then go to the second working note. Chapter 6A. In chapter 6A, 80 AAA, I will still enjoy. But 80C and 80 TTA I will not get. So I'll reverse it. I'll add back 80C. I'll add back 80 TTA. What was the 80C number? 1 lakh 20 and 80 TTA number was 10,000. Guys, you know, right? 80 AAA I can enjoy under default regime. Then PGPP will not change. 10 AA you will not get under default regime. So I'll add back 10 AA. It was 6 lakh rupees. I'll add that back. Then anything else will change. Will my capital gains computation change? No. IFOS also, there will not be a change over here. That's it, guys. So what's your total income as per 115 BAC? You will get 47, 79, 950. Already in multiples of 10. Therefore, no need of any rounding off also. So my total income as per 115 BAC, 46 lakh 79 950. Now on this I have to compute tax. Will I straight away apply slab rate over here, or something will you make me stop and think? Something which I showed you in one earlier question as well. In total income 115 BAC, I am starting with total income as per normal regime. In total income as per normal regime, I am having 112 LTCG of 12 lakhs. So even now I will have 112 LTCG of 12 lakhs. So keep that in your mind. So I will have normal income also. I will have 112 LTCG also. 112 LTCG is still going to be 12 lakh rupees. So what's your normal income? 3479 950. So now we'll start a tax computation. 112 LTCG will be compute tax all over again. We already computed tax. Remember how much was our 112 LTCG tax which we already computed? We did the whole working already without indexation, with indexation, all that will remain the same only. So 112 LTCG we don't have to recompute again. Here my tax liability is 19,200, will stay the same. Normal income only we have to compute. So we are following the default regime. Default regime, what's your basic exemption limit? 4 lakh. Full 4 lakh I will adjust against normal income itself. Again, I don't have any unutilized basic exemption limit. So let's start computing basic tax slab rate. Go ahead. Six six eight nine one zero will be your final tax liability as per the default regime. Then I'll make my final conclusion also over here. So, as per normal regime, if you see, my normal income tax was how much? 659 550, and AMT was how much? 1097940. Out of these two numbers, which number do we take? We take whichever is higher. So 1097,940. This will become your normal income tax. Then as per 115 BAC, as per default regime, what's your income tax? 668,910. So which is more beneficial for the assessee? Normal regime or 115 BSE? Which is more beneficial for the assessee? 115 BSE is clearly more beneficial for the assessee because it has a lesser tax rate, right? Here only 668,910. Normal regime is 10 lakh tax. 115 BSE is definitely better for us. It's more beneficial for us. Or it's a crazy question. I just wanted to change a little bit in the question to give you some AMT practice, and that's why I made you do it as per the normal regime as well. But actual question, real question is only default regime over here. I just wanted to show you at least one question on AMT, and that's why. I hope you got the clarity. I hope you've understood. Even AMT, even 80JJAA got revised for us in the question. Then 112, the drama calculation for tax, even that got revised for us. Amazing question, guys. With this, I think we're good to close this question over here. So now we're starting off with question number 32. I have skipped a question in between. I'll come to that a little later. Come to question 32 first. It's a very good question. The question says, Mr. Shobit, a resident individual aged 54 years. So here itself you will conclude, Mr. Shobit, you are not a senior citizen. He is engaged in manufacture of spare parts. Therefore, assessee will be eligible for additional depreciation. Okay. He follows mercantile system of accounting. Remember earlier we did a question with cash basis. This is mercantile system of accounting. He regularly files his return of income. P&L account for the year ended 31st March 26 showed net profit of 57 lakh 25 after debiting or crediting the following items. So after debiting or crediting 6 items, net profit is 57 lakh 25. So what are they asking us? Compute total income of Mr. Shobit and tax payable. So total income and tax payable, two things they're asking us. If he is opting out of the default regime, which means my entire discussion has to be as per the normal regime. So come on, let's begin. No default regime over here, only normal regime. So total income is what we are computing. Computation is as per the normal regime. Now here they've given me the net profit number. So of course I will have PGBP. I'll give reference to working note number 1. Open working note number 1, PGBP. Here, what's the net profit number? 57 lakh 25,000. Now let's see adjustment by adjustment. This first adjustment, wait, keep it pending. We'll come to this adjustment a little later. Let's finish everything else first. On 1st April 25, production manager working in the factory of Mr. Shobit took voluntary retirement from the services. Mr. Shobit paid him 8 lakh compensation for his services under VRS. These 6 items are already debited or credited. After debiting or crediting. So this 8 lakh is already debited. VRS, how much are you allowed to debit? 1/5 you will get deduction 1/5 across 5 years, guys. Your full 8 lakh assessee has debited. So you will reverse the extra. What is the extra? 8 lakh into 4 by 5 will become extra. Are you understanding? VRS compensation, guys, I hope you know VRS compensation will be allowed only on payment basis. Yes, assessee has actually made the payment. He's actually made the payment, but only 1/5 will be allowed. But here assessee has debited the whole 8 lakh. So the extra 4/5 I am disallowing. I am adding back. This is going to be 6,40,000. I am adding that back. Okay. Then comes the next adjustment. Mr. Shobit purchased raw material from Messrs. Kamal and Sons, a micro enterprise. What is coming to your mind? As soon as you see micro enterprise, section 43B will come to your mind, guys. So Mr. Shobit purchased raw material from Kamal and Sons. So we have Shobit on one side and we have Kamal and Sons on the other side, which is a micro entity, and Messrs. Hitesh and Sons, a medium entity. Will 43B apply when assessee makes a purchase from medium entity? No. So medium entity leave, we'll come to this later. Let's focus on just the micro entity first. 51,000. So Shobit has to pay Kamal and Sons 50,000, 51,000. Okay. Then the question says the purchase happened when? On 15th March 2026. Okay. As per the written agreement, so there is a written agreement between the parties. As per the written agreement, both the payments had to be made by 10th April. So the due date as per the written agreement is 10th April 2026. Mr. Shobit made the payment to Messrs. Kamal on 9th April 26. So actual payment happened when? On 9th April 26. This is the information given to me. Are you ready? Can we start thinking? First of all, when assessee has to make payment to a micro entity, or if assessee has to make payment to a small entity, 43B applies. What does 43B say? 43B says for these transactions, payment has to be made when? Payment has to be made within Section 15 time limit, Section 15 of MSMED Act. Now, what is the Section 15 time limit? It depends upon is there a written agreement between the parties or not. Here, there is a written agreement between the parties, guys. So, because it's a written agreement, Section 15 time limit will be whatever is a time limit as per written agreement, or 15 days, whichever is, time limit as per written agreement, or 45 days, whichever is earlier. That will become your Section 15 time limit for the purpose of 43B. Right? So 43B says payment has to be made within Section 15 time limit. Section 15 time limit will depend upon is there a written agreement between the parties or not. There is a written agreement in this question. Therefore, whatever is a time limit as per the written agreement, or 45 days, whichever is earlier, will become the time limit. What is the time limit as per written agreement here? 10th April 2026. What will the 45 days time limit be? Calculate. See, the transaction happened on 15th March 2026. Please calculate. 15th March 2026 plus 45 days will be how much? Will be what date? So I'm having 16 days in March. Then I need 29 more days. So 29th April 2026 will become 45 days, guys. Check. Correct. So my 45 days time limit will be 29th April 2026. So out of these 2 days, which is earlier? 10th April 2026 will become earlier. So what is your Section 15 time limit now? 10th April 2026. When did assessee make the payment? Assessee actually made the payment on 9th April 2026. Please tell me, has your assessee made the payment within Section 15 time limit? Yes, guys, payment is made within Section 15 time limit. Therefore, will there be any 43B disallowance? There will be no 43B disallowance. No 43B disallowance means it will be fully allowed in the current year itself. In 25-26 itself, it will be fully allowed. There will be no implication of 43B. There will be no disallowance of 43B. Crystal clear? Yes. So I saw whether first of all there's a written agreement or not. There is a written agreement. If there's a written agreement, the time limit will be whatever is the time limit as per written agreement, which is given to us in the question, of 45 days, whichever is earlier. So transaction happened on 15th March 26. I just calculated 45 days from 15th March 26, which is 29th April. So whatever is the time limit as per written agreement, or 45 days, whichever is earlier. So here 10th April 26 is earlier. This will become your Section 15 time limit. But payment is made within that itself. So therefore, there's no problem under 43B over here. There's no violation of 43B over here. So because there's no violation, it will be fully allowed in the current year itself. So current year itself, this whole 51,000 will be allowed. So with respect to the micro entity, is there any disallowance with respect to the micro entity? There is no disallowance. Assessee has made the payment within Section 15 time limit. Therefore, it will be fully allowed in the current year itself. No problem. Okay. Then what about the medium entity, guys? Hitesh and Sons medium entity, for them 75,000. If assessee has to make payment to a micro entity, or if assessee has to make payment to a small entity, that time only you apply 43B. Assessee is making payment to medium entity. Here will 43B apply? 43B will not apply. So if 43B doesn't apply, then what will apply? Whatever method of accounting assessee is following, we will see that itself. Tell me, what method of accounting is your assessee following? Mercantile basis. In mercantile basis, tell me, when do you allow an expense? Whenever assessee incurs the expense. When did he incur the expense? 15th March 26, which is in the current year. So current year it will be allowed. So medium entity also there will be no disallowance. Micro entity also there will be no disallowance. I want everybody to listen to the medium entity point once again, because I have seen micro and small entity, that 43B discussion, the Section 15 time limit, everybody is understanding amazingly well. But the medium entity I have seen a lot of times, generally students don't have the right clarity. So please listen, I will explain once again to you. If assessee has to make payment to a medium entity, first of all, do you know that 43B will not apply? First of all, do you know that 43B will apply only if assessee has to make payment to micro entity or small entity. Here medium entity. Therefore, 43B will not apply. If 43B doesn't apply, then what will apply? Then in that case, I'll have to see what method of accounting my assessee is following. In this question, what method of accounting is your assessee following? Assessee is following the mercantile basis. Mercantile basis means accrual basis. In mercantile basis, tell me, when do you consider an expense? I'll give you two options. Will you consider an expense only when assessee pays the expense, or will you consider an expense when assessee incurs the expense? When will you consider? Mercantile basis, you will consider an expense as soon as the assessee incurs the expense. Right, guys? Now, in this question, when did the assessee incur the expense? See, when did the transaction happen? Shobit purchased raw material from Kamal and Sons, micro entity, and Hitesh and Sons, medium entity, for 51,075,000 on 15th March 26. When did the transaction happen over here? 15th March 2026. That is when assessee incurred the expense. So whenever he incurs the expense, that time itself you will allow the expense for him. Now 15th March 26 is which previous year? This is previous year 25-26, which is your current year. So current year, this entire amount will be allowed. It's already debited in the P&L. So is there anything left for me to do? There is nothing left for me to do. Perfect clarity. Tell me a big fat yes. Have you understood this entire discussion? If only if assessee has to make payment to micro entity or small entity, then only you will think about 43B. But assessee is making payment to medium entity, so I don't care about 43B. I will simply see what method of accounting he is following. On that basis, I will allow. Now, when did he actually make payment to the medium entity? I don't even bother. Assessee incurred the expense in the current year. Current year it will be allowed, and it's already debited in the P&L account. So therefore, there is nothing left for me to do. Okay, then come to the fourth adjustment. Fourth adjustment is also interesting. He contributed 20% of basic salary to the account of each employee under a pension scheme referred in 80CCD. So what is the assessee's actual contribution? 20% of basic salary, which is debited to the P&L account. They are saying basic salary of the employees aggregate is 10 lakh rupees, 10 lakhs basic salary, and DA is 40% of basic salary, forms part of retirement benefit. Correctly tell me. Assessee is employer. For assessee, it's an expense, right? Assessee is putting money into employee's NPS account. See, I'll show you. I'll draw one diagram for you. Employer is putting money into NPS account. In whose NPS account? In employee's NPS account. The NPS account is in the employee's name. Okay. My assessee over here is employer, guys. He is putting money. He contributes. So he is putting money. He is employer over here. Tell me carefully, for employer, is it an expense or is it income? Employer is putting money into NPS of employee's account. The NPS is in employee's name. Employer is putting money in that. He is contributing money in that. So for employer, it's an expense. Expense relating to business or profession. In PGBP head, the expense will be allowed, but maximum how much will be allowed? Maximum 14% of salary will be allowed. This 14% number will always be 14%. Whether it is normal regime, whether it is default regime, doesn't matter. Okay, in both regimes, maximum 14% of salary. Is anybody thinking over here about 80CCD? 80CCD will come into the picture only if assessee is employee. For employee, if you are calculating, then only you will do 80CCD. Here my assessee is employer. He is putting money into employee's account. For him, it's an expense. In PGBP, it will be allowed. Only 14% of salary will be allowed. So what I will do is, whatever assessee is already debited, I will reverse it. Freshly, I will calculate and I will allow the correct number. Okay, are you ready? Come on, come back to your answer, PGBP. So whatever assessee has contributed, I will reverse it first. NPS contribution, he has contributed 20% of basic salary. What is basic salary? 10 lakhs. So 2 lakhs is what he has actually contributed. I will first reverse it fully. I'll first add back this 2 lakh fully. Then freshly I'll calculate and I will allow. NPS contribution, how much will be allowed maximum? I just now told you. 14% of salary. What is salary for this purpose? Salary will be nothing but basic salary plus DA forming part. Basic salary is how much? 10 lakh. How much is DA forming part? DA is 40% of basic salary and it is forming part. So 10 lakh into 40% will be 4 lakh. That's all, guys. It is so simple. 14 lakh into 14%, 1,96,000 is what I will allow. Easy. So whatever is already debited, no, I reverse that. Then correct amount I am allowing. This is also done. Then come to the next adjustment. This adjustment also I will keep it pending for now. Then come to the next adjustment. He received 13850 as income tax refund, out of which 3850 is interest on refund. Entire amount is credited to P&L. First remove. Income tax refund and all is not connected to business. First remove it from P&L. How will you remove a credit? By debiting. Debiting means you will subtract. So income tax refund, I'll first remove it from my P&L, 13,850, and I'll take it to IFOS head, guys. So open, come to your main answer. IFOS, give reference to working note number 2. After working note number 1, leave some 3-4 lines gap. Then working note number 2, IFOS. But tell me, will the entire amount go to IFOS? No, guys. Only the interest on income tax refund will go to IFOS, which is 3,850. This is the second time we are seeing this adjustment. Interest on income tax refund, 3,850. Solid. Covered. This was your sixth adjustment. Then comes the next adjustment, additional information. Additional information, even this I will keep it pending for now. Basically all depreciation adjustments I am keeping them pending. Even this adjustment I will keep it pending. Then comes the next adjustment. He paid 50,000 life insurance premium on the life of father. Father life insurance premium do you allow? No. In ATC you allow only self, spouse and children. Self, spouse and children. Father life insurance premium you will not allow. So nothing to do over here. Then he paid 45,000 life insurance premium on the life of his married daughter. So children you will allow who is not dependent on him. Sum assured is 5 lakhs. Policy is taken on 1st April 2017. Maximum limit will be 10% of sum assured. 10% of 5 lakh is 50,000. We are paying 45,000 only, well within the limit. So I'll open working note number 3, chapter 6A. Here we have section ATC. First of all, life insurance premium which we are paying for father will not be allowed under ATC. Then life insurance premium which we are paying for daughter, this will be allowed. How much are we paying? 45,000. Fully it will be allowed. Then what's your next adjustment? 1 second. Able to see better now? Come to the next adjustment. On 1st October 25, he withdrew 1.5 crore. Wait, even this I'll keep it pending. I'll come to this last. Then comes your last capital gains adjustment. So what are we left with now? 3 adjustments we're left with. One relating to TDS, one relating to depreciation and one relating to capital gains. Let's finish off the capital gains adjustment first. Then we'll come to the depreciation adjustment. The capital gains adjustment is one amazing adjustment. A lot of learning you're going to have over here. I need you to pay 200% focus in what I'm discussing. Take it as a challenge that in the very first explanation you should be able to grasp it. Mr. Shobit sold a house on 30th March 23. Current year or earlier year. Long back, guys. In previous year 22-23, long back. On 30th March 2023, he sold one house. So what's the capital asset which he has transferred? House. I'll call it house 1. Then he deposited the LTCG of 25 lakhs. So from this transfer, he had LTCG how much? 25 lakhs. He deposited that LTCG into capital gains account by the due date of filing return of income. This LTCG he has put into CGD account. Now, when are you going to revisit the CGD account? After 3 years. 30th March 2023 plus 3 years will be what? 30th March 2026. On this date, when you come back to the account, if you find any unutilized money, if you find any unutilized amount in the account on this date, this unutilized amount will be taxed as LTCG for you for this year. Which year is this? 30th March 26 is which year? This will be previous year 25-26, which is your current year. Till here are you clear? So long back in 22-23, assessee made a transfer. That time assessee had LTCG of 25 lakhs which assessee put into CGD account. So how much money is there in CGD account? 25 lakhs. This much money is there in CGD account right now. Then we will come back to this account after 3 years. We will come back on 30th March 26. On this date, if we find any unutilized money in CGD account, that will be taxed as LTCG. Of which year? Which year is this date falling under? 25-26. Now continue reading the question. Then on 1st July 25, he sold another house. So 1st July 25, he sold one more house. So that is going to be which year? 1st July 25 means? 1 second, I need more space. So 1st July 25 means current year. 25-26. In 25-26, on 1st July 2025, he sold another house. So the capital asset transferred is house 2, I can say now. So how many transfers are happening totally now? 2 transfers are happening. One transfer happened long back and one transfer is happening now. Okay, now he transferred house 2, in which he resided. He sold it for 1 crore. He earned LTCG of 40 lakhs. We don't even have to calculate any capital gains. They itself are doing all calculations and they are saying, so from this house, my LTCG is how much? 40 lakhs. From this house 2, which is sold in the current year, LTCG is 40 lakhs. Then, on 5th Jan 26, current year, Jan 26, he withdrew the whole money out of capital gains account. How much money he had in CGD? You have to understand the situation first. How much money he had in CGD? 25 lakh he had in CGD, no? So he withdrew that entire 25 lakhs and invested 60 lakhs total on construction of a house in Mumbai. Careful. In the new house in Mumbai, how much assessee has put total? How much is total investment? 60 lakhs. Where did 60 lakhs come from? They are saying 25 lakhs he withdrew from CGD account. So 25 lakhs came from CGD account. So balance how much more money he needed? 35 lakh rupees more he needed. Total 60 lakhs he put in the new house. Till here are you understanding? Step by step I am taking you. So when did assessee withdraw the money? On 5th Jan 2026 he withdrew the whole money out of CGD account and he invested total 60 lakhs on construction of a new house in Mumbai. Construction of the house was completed on 23rd March. Ignore indexation. Now come on everybody, let's start our game. Tell me, 25 lakhs he put money in CGD. When you come back on 30th March 26, how much money will you still find in CGD? You had 25 lakhs already. In January itself, you have withdrawn the whole 25 lakhs. So when we come back on 30th March, will there still be money in CGD? No guys, CGD will become 0 by then. Yes, so is there any money which is to be taxed as LTCG in 25-26 relating to this transaction? No, because CGD money has become 0. Only if CGD money is still there, then only you will tax it as LTCG. But here, 25 lakhs was there, full 25 lakhs are utilized, nothing is left in CGD account, nothing will be taxed. Simple story, life is easy. Then come to the second part of the question. Current year, what's your LTCG? 40 lakhs. Now, assessee has sold a house. Assessee has purchased or constructed a house. So which section exemption you will claim? Come on, sold a house, constructed a house. You will claim section 54 exemption. Now in 54 exemption, can you talk about this 25 lakhs? No. That is from CGD account. Money is utilized from CGD account. So extra how much you have spent in the current year? 35 lakhs. That will become a 54 exemption of the current year. So current year, what is your taxable LTCG now? Current year, 5 lakhs will become your taxable LTCG under section 112 for the second house too. Got it? So what's your final answer now? Your final answer for 22-23 capital gains, nothing is taxable. For 25-26 current year transfer, 5 lakhs is taxable. 112 LTCG, 5 lakh rupees. Did you understand? This is a highlight of this entire question, guys. The whole capital gains adjustment. Simple. You understood. First understand the CGD point. I put money in CGD account. Full money is withdrawn. So nothing is left unutilized over here. So nothing is taxable from here. Then came the second part of my question. In the second part of my question, my assessee has 40 lakh current year LTCG. 35 lakhs from current year money. 35 lakh only has been put into the new asset. So 35 lakh exemption I enjoyed over here. 5 lakhs will be taxable. You understood, right? Current year, why 35 lakhs I'm taking? Because see, this 25 lakhs has come from CGD. I have already enjoyed exemption over there. Extra money, how much have you put in the house in the current year? 35 lakhs. This will become your 54 exemption in the current year. So current year taxable LTCG is how much? 5 lakh rupees. I'll call this as my working note 4. So working note number 4, capital gains. So point number 1, when it comes to CGD account, there was 25 lakh rupees. How much is utilized? Full 25 lakh rupees. So how much is remaining unutilized? 0. So here nothing is taxable as LTCG. Then current year transfer, if you see, LTCG 40 lakhs they had already given. Then 54 exemption, we only decided together 35 lakhs will be a 54 exemption. So 5 lakhs will become section 112 LTCG. This is done. Now come to the depreciation adjustment. Can we start that? Let's see what is the information given to us. There are 3 to 4 adjustments. All these orange adjustments, let's read them one by one. The first adjustment. During the year, Mr. Shobit purchased plant and machinery for 55 lakh rupees, for which he took loan from scheduled bank. Loan he took on 1st May 25. Rate of interest is 11%. Just reminding you, whatever interest you incur before you put the asset to use, you capitalize. Asset was acquired on 1st July 25, put to use on 1st September 25. Entire interest is debited to P&L. Correct? Terrible. Why are you debiting the whole interest? See, once again. Again. When did assessee borrow the loan? 1st May 25. When did assessee put the asset to use? See, I don't care when you purchase the asset. When did you put the asset to use? 1st September 25. How many months is this? May, June, July, August. 4 months. This 4 months interest can you debit to the P&L? No, right? This 4 months interest has to be capitalized. This 4 months interest has to be added to the actual cost. It has to be added to the block. On this 4 months interest, you will claim depreciation. You should not allow this. You should not debit this 4 months interest. But here the question is saying entire interest is debited. So first of all, I will reverse that debit, guys. How much is the 4 months interest? Tell me. 55 lakhs loan into 11% interest into 4 by 12. How much will this be? This is going to be 2,01,667. First of all, I will reverse this interest. Take it to your PGBP. Here, I will add back interest to be capitalized. Total 55 lakh loan I borrowed. 11% is the rate of interest. 4 months interest alone I am going to reverse. 2,01,667. Till here you understood. Whatever interest I am incurring till I put the asset to use, I should not debit it to the P&L because I have to add it to the cost. Therefore, I reversed it. I added it back. Then depreciation debited to P&L account is 27 lakh 50. I will reverse this depreciation. Freshly, I will calculate again. So depreciation already debited 27 lakh 50. I am reversing it because once again freshly I will calculate. Then the question says, so this adjustment is done. Then the question says, Mr. Shobit purchased a new computer on 31st August 25, put to use on the same day in his office. Payment was made as under 28,000 in cash at the time of purchase, 25,000 paid by account pay check. So what I'll do now is I'll open a separate working note for depreciation. I'll call it working note number 5, depreciation. So what is the first asset over here? This computer. Computer is going to be plant and machinery. 40% plant and machinery, guys. Tell me, what amount will enter into the block? He purchased a computer on 31st August 25, put to use on the same day, which means definitely it is put to use for at least 180 days. It is put to use in office, so will you get additional depreciation? See, assessee is a manufacturer, you will think about additional depreciation. But remember, if the asset is being used in office or in guest house, then no additional depreciation. So because asset is used in office, because of that reason, there will be no additional depreciation over here. Then come on, payment was made as under. 28,000 was paid in cash at the time of purchase. More than 10,000 rupees you are paying in cash. Will this amount enter into the block? No. 25,000 you paid by account pay check. This will enter into the block. So on 25,000, what's your normal depreciation? 40%. You will get depreciation for the whole year because put to use for at least 180 days. That's going to be how much? 10,000 rupees. No additional depreciation over here. Why no additional depreciation? Because asset is used in office, not in factory. Therefore, no additional depreciation. This is my first discussion, guys. Then after this, WDV as per Income Tax Act they have given to us. Plant and machinery they have given. Factory building they have given. Plant and machinery, I have new addition also. Remember that 55 lakhs new asset we purchased. There we have to capitalize the interest and all. We will do that. First, let's finish off factory building. So factory building. Here there's no addition and all. So what is my opening WDV? 6,45,000. On that itself I'll claim depreciation. Building, what's a depreciation rate? 10%. Only if it is temporary structure like wooden structure and all, then only 40%. Otherwise factory building normal depreciation is 10%. So 64,500 will become your normal depreciation on building. Okay. Now comes your plant and machinery block. Your block C, plant and machinery. This is plant and machinery block, 15% depreciation rate. Okay, let's start. What's our opening WDV here? See, given here, opening WDV is 8 lakh rupees. Then add actual cost of assets acquired. We have acquired a new asset in the year. Remember that 55 lakh asset for which we have interest also. So 55 lakhs is how much we have acquired the asset for. Then tell me, remember we will also capitalize the interest. That 4 months interest we are capitalizing. You recall that 4 months interest we had reversed in PGBP. We had said that we will capitalize this, we will add it to the block. Whatever interest, whatever expense you incur before you put the asset to use, you add it to the block, no? So this 2,01,667 is at 4 months interest which you have incurred before putting the asset to use. So this number will be added to your block. So 2,01,667. So what amount will enter into the block now? 57,01,667 will enter into the block. Then less money is receivable for asset sold. We didn't sell any asset. So what's your closing WDV now? 65,01,667. Okay. Now be careful. The new asset is put to use when? 1st September 25. Put to use clearly for at least 180 days, guys. So I will get full year's depreciation. I will get. So first I'll calculate my normal depreciation. 65,01,667 into 15%. That's going to be 975250. This is your normal depreciation. Then you will have additional depreciation. Why additional depreciation? Normal regime, guys. Manufacturer, plant and machinery, new plant and machinery, not second-hand plant and machinery, not road transport vehicle, not ship, not aircraft. Therefore, you will get proper additional depreciation. You will get put to use at least 180 days, full 20% additional depreciation you will get. But on what? What's the value of the new asset? 57,01,667. This into 20%. That will be how much? 11,40,333. So here I am having two depreciation numbers. So now tell me, guys, finally, what's the total depreciation? For computer, 10,000 rupees. Then for building, 64,500. And then here two numbers. So your total depreciation is going to be 21,90,083. Got the point? Total depreciation. So this number I'll take to my main answer and I will adjust. Depreciation 21,90,083. Okay. It was an interlinked adjustment. Whatever interest I incurred before putting the asset to use, I first disallowed the interest. Then I capitalized that interest. Then I claimed depreciation. Sorted, everybody? Yes, is it all nice and set? Computer was simple. I straight away calculated 40% depreciation. Factory building 10%. Plant and machinery, here I had to be careful. Whatever I have incurred before I put the asset to use, whatever expense I incur before putting the asset to use has to be capitalized. So I capitalize the 2,01,000 interest. Okay, that's it, guys. Go ahead, close your question. Only one adjustment we are left with, and that's your tax. This withdrawal adjustment. We'll come to that when we compute tax. Right now, let's close our answer. Tell me the PGBP number. I'm getting 71,16,734. 71,16,734. Then IFOS is 3,850. Then we have 112 LTCG also. 5 lakh rupees. No other income. So what's our GTI? 76,20,584 is our GTI. From this we will subtract chapter 6A. Remember, we had one chapter 6A. We had 80C. How much was that? 45,000. That's all, guys. So what is our assessee's total income now? 75,75,584. This is the total income of your assessee, which you will remember to round off. 1 minute. We are having special rate income, so we should split. Right? I have 112 LTCG special rate income over here. So I will split this income into normal rate, special rate. Special rate is 5 lakhs and my normal rate income is 71,20,584. My chapter 6A I will allow only against normal rate income, 45,000. Now give me the final answer. Round it off to the nearest multiple of 10. 75,75,580 will become your total income. Now come on, let's start our tax computation. Normal regime, basic exemption limit is 2,50,000 only. So two types of incomes we are having over here. We are having normal income also, 112 LTCG also. So 112 LTCG is 5 lakhs. Normal income will be 70,75,580. Compute tax now. My basic exemption limit fully I will adjust against normal income itself. There is nothing left for me to adjust against 112. So basic tax. Check, do you get this right? 19,35,264. 112 LTCG. Here they've asked us to ignore indexation. They've not given us any indexation numbers. So I can't do that with indexation, without indexation, whichever is lesser. We can't do all that because information they have not given. So straight away 12.5% tax I will apply. So my total basic tax will be 19,97,000. One second, this should be 674. This will be 174. Yeah, 19,97,674 now. This is your basic tax total. No rebate. Income is more than 5 lakhs. Straight away you will add surcharge at 10%. Then you will add cess, and then you will give your final number. So 22 lakh 85,339 will be your tax liability. But here they asked us for tax payable, guys. So this is where 194N will come into the picture. Remember, we had one pending adjustment. Come on, one last adjustment. He withdrew 1.5 crore in cash. When you withdraw cash, which section TDS? 194N TDS, guys. And here the question is assessee is filing return of income and all properly, question is saying. So 1.5 crore you are withdrawing. So what is excess above 1 crore? 194N. Up to 1 crore, no TDS. If you withdraw more than 1 crore on the excess above 1 crore, 50 lakh, on that 2% TDS. So 50 lakh into 2%, 1 lakh will become your 194N TDS credit, which I'll subtract over here. So your tax payable will be 21,85,339, which we will round off to 21,85,340. Got it? Yes. So what was your learning from this question? A hell lot of learning. First of all, whatever expense we incur, before we put the asset to use, we're supposed to capitalize that expense. We should not debit it to P&L. So we reversed it from our P&L and we capitalized it. We added it to the block. Then VRS allowed across 5 years. Then the micro entity, medium entity, that was a very interesting discussion. For the micro entity, we applied 43B, section 15 and all we checked. But for medium entity, we don't care about 43B. So on the basis of mercantile accounting itself, we allowed it. Then NPS also was a different adjustment over here. NPS, maximum 14% of salary only is allowed for the employer. Then the depreciation adjustment, I think you've understood pretty well. 194N, got it? If I withdraw cash up to 1 crore, no TDS. If I withdraw more than 1 crore on the excess, 2% TDS. Assessee is not a defaulter over here. ITR and all, he has filed properly, the question says. See, given here in the beginning itself, he regularly files his return of income. So he regularly files his ITR, he is not a defaulter. Therefore, I will apply the 1 crore limit for 194N. Then capital gain CGD point was interesting. That's it, guys. 21,85,340. This will become your final tax payable number under this question. Alright, so can I close this question over here? Says we already added here itself. I just didn't put the number, but we already added the says over here. Alright, so we'll close this question over here. Now we're left with one question, question number 28, and 2 adjustments in question number 27. These 2 we will see in our next session, guys. So we are going to continue with our total income discussion. We have one question left in total income, and we have one more question where we have to discuss some 2-3 provisions. Alright, so let's start with that. Let's start with question number 28 directly. Let's read the question and then we will work it out. The question says, Mr. Ayush, a resident individual aged 54 years. So at this stage itself, I will conclude that Mr. Ayush, you are not a senior citizen. Okay, he is engaged in the business of manufacturing textiles. So what comes to your mind? Only one thing will come to your mind, guys. Manufacturer. Additional depreciation will come to your mind. Then they have given us net profit 82,45,000 as per P&L account. They've given us all these debits and credits. See, if you remember, the first few total income questions we worked out, there they had given us P&L account. We had the net profit number in P&L account. But in these last 2-3 questions we are working out, we don't have a P&L account. They've given us adjustments over here like this in statement form, but we still have the net profit number. So because we have the net profit number, we will definitely have PGBP, our usual indirect method we will be following. Okay, they've given us 7 adjustments. What are they asking us? you are required to compute total income and tax payable. So total income also, tax payable also by Mr. Ayush for assessment in 26-27, assuming he has shifted out of the default regime. Shifted out of the default regime means what? Which regime are they expecting us to follow? Of course, you're expecting us to follow the normal regime. Okay. So under the normal regime, total income and tax payable. Are you ready for the game, guys? Yes, come on, let's begin. This is our last full-fledged total income question. So let's do it as nicely as we can. So total income computation we're doing first. I'm doing first as per the normal regime. Okay, only normal regime required over here anyways. Okay, so first of all we have the net profit number, so of course we will have PGBP. So I'll open my PGBP head, give reference to working note number 1. I'll open working note number 1, PGBP head. Okay, now let's see what has happened. First of all we have the net profit number. I'll start with that. So net profit is 82,45,000. Okay, then the question says depreciation is 15,40,000, and by the way, net profit is 82,45,000 after debiting and crediting the following items. Okay, so these four things have been debited and credited, and after that, this is a net profit number. So what are the four things? Depreciation 15,40,000. For now, I'll assume that this depreciation is as per Income Tax Act, so nothing to do. Now, short-term capital gains on transfer of listed equity shares in a company on which STT is paid 10 lakhs. Guys, this is already credited in the P&L account. Is it okay for you? Short-term capital gains is credited. It's not okay, right? We have to remove this from our PGBP and we have to take it to the capital gains head. So how will you remove a credit? They are saying these four things are already debited and credited. So how will you remove this STCG? How will you remove a credit? By debiting it, that is, you will subtract. So I will subtract the STCG of 10 lakh rupees, which is already credited over here, and I'll take it to my main answer. So in my main answer we are having STCG. We don't even have to compute over here. They've already computed and given us a number. What kind of STCG is this? Is this 111A STCG or is this normal STCG? The question says transfer of listed equity shares in a company on which STT is paid. It is listed equity shares, STT is paid. Therefore, what kind of STCG is it? It's going to be section 111A STCG. Alright, what is the amount? The amount is 10 lakh rupees. Alright. Okay, so this was our second adjustment. Then comes the third adjustment. He received income tax refund of 15,550, which includes interest on refund of 4,550. What about this? This also is credited already to the P&L account. Income tax refund has been credited. Wrong, right? It is not a business income. I'm supposed to remove this. How will you remove a credit from PGBP? Same thing. You will debit it, you will subtract it. So in your PGBP working note, less income tax refund, what's the amount? The amount is 15,550. I will remove this from my PGBP and I'll take it to which head? See, the income tax refund is not taxable, but the interest on income tax refund is taxable under IFOS head. So I'll open a new working note. Let's call it working note number 2, IFOS, and under this, interest on income tax refund. Look for the amount, please. The total income tax refund is 15,550, which includes interest 4,550. So the interest alone will be taxable under IFOS head. Okay. Then come to the fourth adjustment. Dividend income from Indian companies 15 lakhs. Even this is credited to the P&L account. So I will remove it from my PGBP. Dividend income. What is the amount? The amount is 15 lakh rupees. So these four things, guys, were debited or credited already. So accordingly, we made the changes. Alright. So come back to your answer now. IFOS dividend amount is how much? 15 lakh rupees. I removed it from my PGBP and I'm going to tax it under IFOS head. Now comes a very interesting sentence. You tell me why they've given this information. Okay, we are saying dividend received from each company is less than 10,000. Why are they giving me this information? Are you able to think about something? Why are they saying that total dividend income is 15 lakh rupees, but dividend from each company is less than 10,000? Why are they giving me that information? Very simple reason. The reason is TDS, guys. See, for dividend, we have section 194 TDS. Section 194 says only if the dividend amount is more than 10,000, only then TDS will come into the picture. Guys, earlier the limit was 5,000, but after the amendment now, May 26 examination onwards, limit is 10,000. So section 194 says only if the dividend is more than 10,000, only then there will be TDS. Here they are saying that dividend received from the company. We have received dividend from multiple companies. Each company has given us dividend less than 10,000 only. Because the dividend is not more than 10,000, indirectly, section 194 TDS will not apply over here. That is what they're trying to tell us, that TDS will not apply over here. Okay, if it was more than 10,000, then TDS will apply. By the way, section 194, what's your TDS rate? Are you aware of that? TDS rate is 10% over here, right? So section 194 TDS will apply only if the dividend is more than 10,000. Here they are saying it is less than 10,000, which indicates that there is no TDS. Now come guys, they have given us additional information. The question says Mr. Ayush installed new plant and machinery for 65 lakhs on 1st October 25, which was put to use on 1st Jan 26. Depreciation, including additional depreciation on this amount of 65 lakhs, is included in the depreciation debited to P&L account, which has been computed as per income tax rules. For a moment, let's keep this adjustment pending, guys. Even over here, this depreciation adjustment is there. Let's keep all depreciation adjustments pending. At the end, we'll come to the depreciation adjustments and we will finish them off. Okay. Even this is depreciation adjustment. I'll keep this also pending. Then comes your next adjustment. Advance tax paid during the year is 17 lakh 50. Why do I need this information? Later I have to compute tax payable. So when I'm computing tax payable later, that time I will take this advance tax paid as credit. So this amount will be useful for me later only. Should I do anything in my PGBP calculation? No guys. Is this already debited or credited to P&L account? No. Ma'am, how do you know that? Very simple. All this is given under additional information heading, right? So what is already debited or credited? Only 4 things we had under that. Alright, all this other information I'm reading now is only additional information. So it is not debited or credited in the P&L. Nothing is required for me to do in PGBP head. Then the question says Mr. Ayush purchased goods for 40 lakh rupees from Mr. Ram, his brother. Market value of the goods is 35 lakhs. Any section comes to your mind first of all. Assessee has purchased goods. He has spent 40 lakh rupees. He has purchased goods from his brother. Market value is 35 lakhs. I'll tell you what is coming to my mind. To my mind, section 40A subsection 2 is coming to my mind. What does section 40A subsection 2 say? 40A subsection 2 says assessee has incurred an expense relating to business or profession, and that expense happens to be excess, or the expense happens to be unreasonable, and the other party happens to be relative. If all these conditions are fulfilled, then whatever is the excess or the unreasonable portion, to that extent the expense is going to be disallowed. Do you remember guys? 40A subsection 2. But are you noticing, as soon as I see it is excess or unreasonable, am I straight away disallowing? No, I will always sing my song. I will always check my conditions. 3 conditions. Tell me, has my assessee incurred an expense? Yes guys, he has purchased goods, so he has incurred expense. Is it excess or unreasonable? Yes guys, market value is 35 lakhs only. Assessee is paying 40 lakh rupees. So what is the excess portion? This expense is excess by 5 lakh rupees. So yes, this expense is excess or unreasonable. Then is the other party relative? Do you know what is the meaning of relative for the purpose of 40A subsection 2? I'll tell you. See, if I am the assessee, 40A subsection 2 says relative will include my brother, my sister, my parents, grandparents, great-grandparents, and so on, my children, grandchildren, great-grandchildren, and so on, and my spouse. This is the meaning of relative for the purpose of 40A subsection 2. Now tell me, who is the other party in this question? Brother. Is brother coming in this category of relatives? Yes guys, assessee's brother, assessee's sister is also covered in relatives. So yes, the other party is a relative. All my conditions are fulfilled. Welcome to 40A subsection 2. What is the excess portion? The excess portion is 5 lakh rupees. This excess is going to be disallowed. So come on, come back to your answer. So I'll add back section 40A subsection 2. What is the excess amount? The excess amount of 5 lakhs I'm going to disallow. At this stage, can I show you one small light bulb moment? Listen to me. Do you remember in one earlier question we had section 40A subsection 3? What was 40A subsection 3? I'm just doing one small comparative analysis between 40A subsection 3 and 40A subsection 2. See what happens in 40A subsection 3. Here assessee is incurring an expense and assessee is making payment for this expense, and the payment happens to be more than 10,000 rupees, and assessee is making the payment in non-specified mode. So when this happens, tell me, what do you do? If assessee makes payment more than 10,000 for an expense in non-specified mode, what do? You disallow the expense. But tell me, do you disallow only the excess expense, or do you disallow the whole expense? Like for example, 12,000 rupees I made the payment in cash. You will disallow fully, right? You will disallow the whole expense, guys. But are you noticing in 40A subsection 2 what are we doing? Here also assessee is incurring an expense. Here the other party happens to be a relative, and this expense happens to be excess or unreasonable. But are you noticing in 40A subsection 2, do I disallow it fully? Like here, did I disallow the whole expense? No. Here I disallow, but I disallow only the excess. Okay, now ma'am, why are you showing us this? There's a simple reason. Have you noticed in the examination sometimes we start overthinking? Have you noticed that in the examination we start getting doubts which we never got during our entire preparation? This is one such kind of doubt which will suddenly pop into our head in the examination. So be very clear now itself that in 40A subsection 3, if I disallow fully. But in 40A subsection 2, I disallow only the excess portion. So what is my excess over here? 5 lakhs. That alone I disallowed. This is also done, guys. Simple. Now come to the fifth adjustment. He paid 40,000 as life insurance premium taken on the life of his married daughter who is not dependent on him. Sum assured is 5 lakh rupees. Policy is taken on 1st April 2016. Go step by step. Policy is taken on 1st April 2016. Policy is taken on or after 1st April 2012. What's the maximum limit for premium? Maximum 10% of sum assured, guys. Sum assured is how much over here? Sum assured is 5 lakhs. What is 10% of 5 lakhs? 50,000. Up to 50,000 we can pay premium. How much my assessee has paid premium? He has paid 40,000 only. It is well within 50,000. So 40,000 will be fully allowed. Point number 1. Which section? Life insurance premium. By the way, which section am I talking about? Of course, I'm talking about section 80C. And this policy is in the name of married daughter. Is it okay for us? Married daughter who is not dependent on him. Is that okay? Yes, guys. In 80C, I can pay life insurance premium for self, spouse, or children. Children can be married, unmarried, dependent, independent, own children, adopted children, any number of children, minor children, major children, doesn't matter. Assessee is paying life insurance premium for children, 80C will apply. So now let's open a separate working note for chapter 6A. So I'll come to my main answer and I'll open working note number 3 for chapter 6A. Under chapter 6A here I am having section 80C. How much premium have we paid? 40,000. This 40,000 is well within 10% of sum assured. Therefore this 40,000 will be fully allowed. Okay. Then come to your next adjustment. Your sixth adjustment over here. The question says he paid. So the next adjustment says he paid 45,000 by check towards health insurance policy covering himself, his spouse and his children. Identify the section, please. Health insurance policy, premium on health insurance policy, medical insurance policy. Which section are you thinking about? I am thinking about section 80D here. So section 80D will come into the picture over here. Let's go step by step. Is check okay for you? Yes, 80D just says payment has to be made by non-cash mode. Here payment is made by non-cash mode. Is self, spouse and children covered? 80D covers self, spouse and dependent children. I'll assume the children over here are dependent. 45,000, guys. What will be the maximum limit in 80D? The maximum limit in 80D is going to be 25,000 only over here because assessee, spouse, children, nobody is a senior citizen over here. Therefore, the limit is going to be 25,000 only. So, section 80D, even though the premium we are paying is 45,000, we are going to restrict it to 25,000 only. Okay. Then comes your seventh adjustment. On 1st July 25, Mr. Ayush withdrew 1.5 crores in cash. I'll keep this pending. You know very well why this is going to be, why this information is given to us. Same thing like question number 32 which we did earlier. Why are they giving us about a cash withdrawal? Assessee withdrew 1.5 crore in cash. Why are they giving me that information? 194N TEDS credit I will be having. So I'll keep that information pending. When I do tax payable, that time I'll see that information. Now can we come to the last adjustment which is left in the question, the depreciation adjustment. Okay guys, come on, let's see what is the information over here. First of all, they are saying that depreciation 15 lakh 40 is already debited to the P&L account. Okay. Then they are saying Mr. Ayush installed new plant and machinery for 65 lakhs on 1st October 25, which was put to use on 1st Jan 26. So first of all, do you agree that this machine is being put to use clearly for less than 180 days? Because it is put to use only on 1st Jan 26, guys. So definitely less than 180 days. Depreciation, including additional depreciation on this amount of 65 lakhs, is included in the depreciation debited to P&L. What does this mean? They have already debited the depreciation. So is there anything left for me to do with regards to this depreciation point? With regards to this point, is there anything left for me to do? Nothing, guys, because this 65 lakhs, they are saying that normal depreciation and additional depreciation, they have already claimed. And depreciation is already debited to the P&L. So I don't have anything left to do with regards to this point. Okay, now come to the next point. Mr. Ayush took a loan from SBI. 50 lakh loan he took. On 1st September 25, he took this loan at 10.5% per annum interest to purchase this plant and machinery. total interest up to 31st March 26 has been paid on 31st March 26 and the same has been debited to P&L account. So what do we have to do now? They have correctly claimed depreciation on 65 lakhs, but to buy this plant and machinery, assessee has borrowed a loan of 50 lakhs and on that loan full interest has been debited to P&L. Is that correct, guys? Remember similar adjustment we had in our question number 32 also earlier. So whatever interest my assessee has incurred till the asset is put to use, what are you going to do with that interest? It should not be debited to the P&L account. That interest has to be capitalized and on that interest you have to claim depreciation. So here see, this depreciation is already debited to the P&L. The plant and machinery depreciation is also correctly calculated. So all this I don't have to do anything. I just have to handle the interest portion now. Are you ready, guys? Yes, come on. Let's open a separate working note. Working note number 5 for interest. Tell me first of all, we'll go step by step, okay? What is the date of borrowing? When did assessee borrow the loan? He borrowed the loan on 1st September 2025. When did the assessee put the asset to use? He put the asset to use on 1st Jan 2026. So how long is this period? September, October, November, December. 4 months, guys. So for 4 months, whatever interest assessee has incurred, that interest is supposed to be not debited to the P&L account. But what has my assessee done? The question says assessee has debited the whole interest to the P&L account. So come on, let's find this 4 months interest first. How much loan we borrowed over here? 50 lakhs loan. On this, what's the interest rate? 10.5% interest rate for 4 months. How much is going to be of 4 months interest? 50 lakh into 10.5% into 4 by 12, I am getting 1,75,000. So this 1,75,000, which is the 4 months interest, what will I do with that? I will first reverse it. I will disallow this interest because it's already debited to the P&L. I will disallow this interest first. Then on this interest, what I will claim? On this interest, I will claim depreciation. So depreciation on 1,75,000. Are you following? Why am I claiming depreciation on this interest? Because this is an expense which we have incurred before we put the asset to use. Because we have incurred the expense before we put the asset to use, this number will go into the block. And on this amount, we will claim depreciation. But my assessee has debited the whole amount in the P&L, which means my assessee has not claimed depreciation on this amount. So I'm going to now claim depreciation. So normal depreciation on 1,75,000 will be how much? 1,75,000 into depreciation rate is how much? 15% into asset is put to use for less than 180 days. Remember, so only half year's depreciation I will get, guys. That's going to be how much? That's going to be 13125. This is my normal depreciation. Then I will get additional depreciation also, no, because this is going to be capitalized to your plant and machinery block. And assessee is a manufacturer, so I will get additional depreciation also. So additional depreciation on 1,75,000 will be how much? Assessee has put the asset to use for less than 180 days. So therefore, I will be getting only 10% additional depreciation, which will be 17,500. So how much depreciation are you going to now allow in your PGBP computation? Total depreciation to be allowed on this interest is going to be 13125 plus 17,500, 30,625 depreciation you are now going to allow. 30,625. This is what you're going to now allow. Crystal clear, everybody? Yes, see, in the last question that we did, okay, this question number 32, here if you remember, we freshly calculated the whole block computation we did again. We saw how much is entering into the block, we capitalized the entire interest, whole depreciation we computed. But in this question, we did not have to do everything, because on the 65 lakh plant and machinery, on that assessee has already claimed depreciation properly. Problem in this question was only the interest angle. So I'm targeting only the interest component. So there are two implications now. This interest of 1,75,000, I'm first going to disallow fully. Then on that interest, I'm going to claim depreciation of 30,625. Okay, come on, let's go ahead and do that. So in my PGBP working note, I'm going to first add back the interest. I'm going to disallow the interest 1,75,000. Then on that interest, I'm going to claim depreciation. So depreciation on the interest was how much? 30,625. For both of these, I'll give reference to working note number 5. Alright, so with this, our depreciation adjustment is also done. Now come on, let's close our answer. All the adjustments are done. Give me the net PGBP of your assessee. I am getting 63,73,825. Please check whether my number and your number is matching. Total PGBP 63,73,825. 825. Okay, then IFOS is 15,04,550. Only two numbers we had in IFOS. IFOS working note to 15,04,550. No other income, guys. We don't have any IFHP, don't have any salaries and all. So what our assessee is GTI at this stage. 88 lakh 78,375 is our assessee's GTI. I have chapter 60, remember, ATC, ATD, two sections I have. But before I do chapter 60, does something come to your mind? We always split our GTI into normal rate income and special rate income. We do have special rate income. Our 111A STCG is special rate income over here, 10 lakh rupees. So what's our normal rate income now? 78 lakh 78,375 will become my normal rate income. Okay, so now I will subtract my chapter 6A only against normal rate income. So give reference to a working note. I think working note number 3. Yes, working note number 3. Total chapter 6 is 65,000, guys. Total chapter 6 is 65,000. Remember, we had 40,000 in ATC and we had 25,000 in ATD. That's it. What's your net income now? 78 lakh 13,375 and 10 lakh. So what's your total income? 88 lakh 13,375, which you should remember to round off to the nearest multiple of 10. 88 lakh 13,380. This becomes the total income of our assessee. On this number now we have to compute tax. So now come on, let's start our tax payable computation in the question. Give your next heading, tax payable. Which regime are we following? We are following the normal regime. And what's your basic exemption limit? Assessee is not a senior citizen, guys. So basic exemption limit will be 2,50,000 only. So two types of incomes you're having. We are having 111A STCG also, and we are having a normal rate income also. So normal income and 111A STCG. So give the numbers, please. What's your normal income? 78 lakh 13,380 and 111A STCG is 10 lakhs. My basic exemption limit 2,50,000 fully I will adjust against normal income. So do I have any basic exemption limit left with me which I can adjust against 111A STCG? I don't have any basic exemption limit which is left with me because normal income this itself will exhaust the entire basic exemption limit. So straight away I'll start computing basic tax now. Come on, guys, on the basis of slab rate first. So 0 to 2,50,000. No tax. Then 2,50,000 to 5 lakh. On that difference, 5% tax. That will be 12,500. Then 5 lakh to 10 lakh. On that 20% tax. That will be 1 lakh. Then above 10 lakh, 30% tax. So what is your income above 10 lakh? On that 30% tax. I am getting 2,044,014. So my total basic tax on my normal rate income is 215,651,4. Okay. 111A STCG, what's your tax rate? 20%. 111A 20%, guys. So 10 lakh into 20% will be 2 lakhs. So your total basic tax will become 23 lakh 56,514. Then tell me, will I have rebate? No rebate because income is more than 5 lakhs. But will I have surcharge over here? Definitely we'll have surcharge. Up to 50 lakh, no surcharge. 50 lakh to 1 crore. My assessee's income is more than 50 lakh within 1 crore. Here you will have 10% surcharge. So this is your basic tax. To this I'll add surcharge at the rate of 10%, which will be 235651. Your net tax at this stage will be 2592165. No marginal relief. Income is far away from 50 lakhs. So straight away I'll add cess at 4%, which will be 103,687. So your total tax at this stage will be 2695852. Check. Does your number and my number match at this stage? 26,95,852. This is your tax liability. But they did not ask for tax liability, they asked for tax payable. So I have to subtract TDS, TCS credit over here. I have to subtract advance tax and all. So advance tax you have given 17,50,000, will come to it. First, let's finish off 194N TDS credit. The question says Mr. Ayush withdrew 1.5 crores in cash from 3 current accounts maintained by him. There are no other withdrawals during the year. He regularly files his return of income. So again, he's not a defaulter, guys. Had he been defaulter, then what will you say? Up to 20 lakh, no TDS. 20 lakh to 1 crore, 2% TDS. More than 1 crore, 5% TDS. You will say all that. But here the question says he regularly files his return of income, which means he's not a defaulter. So because he's not a defaulter, normal, the 1 crore slab only will apply for us. So section 194N TDS, how will you compute? 194N TDS credit up to 1 crore, no TDS. What is the amount more than 1 crore? 50 lakhs on that 2% TDS. That's going to be 1 lakh rupees. 50 lakh into 2%, 1 lakh rupees is going to become your 194N TDS credit. So, and then we also have advance tax. How much advance tax has our assessee paid? 17,50,000. So, what's it? Net tax payable by your assessee? 8,45,852, which I will remember to round off to the nearest multiple of 10, 845, 850. That's it, guys. So we had 194N once again over here. Just giving you a reminder, in both the questions, assessee was not a defaulter. Therefore, straight away we applied the 1 crore slab. But if he is a defaulter, then in that case, up to 20 lakh, there will be no TDS. More than 20 lakh, up to 1 crore, there will be 2% TDS of the excess. And if he withdraws more than 1 crore, then there will be 5% TDS of the excess. In both the questions we did, in both he was not a defaulter. That is why we straight away applied the 1 crore slab itself. Alright, that's it, guys. That's it with this question. So what were your learnings in this question? Your learning number 1 was, of course, about the depreciation point. The depreciation angle was pretty interesting over here. See, in the last question, we had to recompute the whole depreciation. In this question, we did not have to recalculate the whole amount of depreciation. We just had to be careful about the interest component. So we just disallowed the interest for 4 months. And on that 4 months interest, we claimed normal depreciation also. We claimed additional depreciation also. 40 subsection 2 is something which we saw for the first time in these questions, and I think the rest of the question was simple. Alright, so this was question number 28, guys. This was the last total income question. Now question number 27, I'm not working it out for you because it's very similar to whatever we've already done in the past, but there are 2 adjustments alone over here which I wanted to discuss with you. This 5th adjustment over here and this adjustment over here. See, assessee has received 47,000 share of profit from an AOP where all the members are individual and which has paid tax by normal rates of income tax. Now this is something which might be new for many of you. Let me quickly explain the point. See, no doubt this particular point is not there in your ICAI study material, but they have asked this point multiple times in RTPs and MTPs and even in the examination. It's an examination question, so I think you should know about this point to be on a safer side. See, let's say I'm getting a share of profit from partnership firm or LLP. What will your answer be? Exempt or taxable? You will immediately say that it's going to be exempt, everybody. Then what if the question says that I got a share of profit from HUF? Here what will your answer be? Even here your answer is going to be exempt only. Now our discussion right now is, what if your assessee is a member of AOP? What if your assessee is getting share of profit from AOP? Okay, this is what the matter of our discussion is right now. Is this going to be exempt or taxable? It depends. It depends upon at what rate AOP is paying tax. If AOP is paying tax at the normal slab rate, okay, then in that case, for the member, this share of profit is going to be taxable. But however, if the AOP is paying tax at the maximum marginal rate, then in that case, for the member, this share of profit is going to be exempt. Understanding? So for the member, is a share of profit exempt or taxable from AOP? From AOP, whatever share of profit the member is getting, is it exempt or taxable? That fully depends upon whether the AOP is paying tax at normal rate or whether AOP is paying tax at maximum marginal rate. So if the AOP is paying tax at the normal rate, then for the member the share of profit will be taxable. But if the AOP is paying tax at the maximum marginal rate, then for the member it will be exempt. And what is maximum marginal rate? This is something which you must have learned in a basic concepts chapter itself. What's your maximum possible slab rate? 30%. What's your maximum possible surcharge rate? 37%. And then 4% cess. So how will it be? Like for example, if 100 rupees is your income, then your basic tax, let's say 30%. 30% will be 30 rupees. On this surcharge 37%, 30 into 37% will be 11.1 rupees. Total will be 41.1. And then when you add cess of 4%, it will be 1.644. So your total maximum marginal rate number will be 41.1 plus 1.644, 42.744. This is your maximum marginal rate. So if the AOP is paying tax at the maximum marginal rate, then in that case, for the member, whatever share of profit we get from the AOP will be exempt. But if the AOP is paying tax at the normal rate, at not the maximum marginal rate, then for the member it will be taxable. You understood the maximum marginal rate calculation, guys? It's very simple. What's your maximum possible slab rate? 30%. What's your maximum possible surcharge rate? 37%, and then 4% cess. That's exactly what I did. So if 100 rupees is my income, 30% tax on that 37% surcharge, then this will become your total tax 41.1. On this 4% cess, so 42.744. So if 100 rupees is my income, if I'm paying tax at maximum marginal rate, I'll end up paying 42.744. So this is maximum marginal rate. So if AOP is paying tax at maximum marginal rate, then for the member, whatever share of profit we got from the AOP will be exempt. Now look at the question. The AOP is paying tax at normal rate. AOP is not paying at maximum marginal rate. In this question, AOP is paying tax at normal rate. So you tell me, for the member, whatever share of profit they're getting will be exempt or taxable. AOP is not paying tax at maximum marginal rate. So for the member, whatever share of profit they're getting, the share of profit will become taxable for the member. Got it, guys? So this is one small point I wanted to show you. Had the question said AOP is paying tax at maximum marginal rate, then I would have said for the member it is, the share of profit is exempt, I would have said. Okay. Then comes your next point, tuition fees. About this I want to show you one small comparative analysis. Okay. Listen to me very carefully. You will find it very interesting. See, I'm comparing two things, tuition fees and interest on education loan. Tuition fees, tell me, you get a deduction under which section? For tuition fees, which section do you talk about? You talk about section ATC. Interest on education loan, which section do you talk about? Here you talk about section ATE. Okay, this is the first difference. Second difference in tuition fees, how many children are you covering maximum? Tuition fees will be allowed under ATC, but maximum 2 children only. But in interest on education loan, here is there any limit on the number of children? Here there is no limit on the number of children, guys. In interest on education loan, the student can be assessee himself, the student can be the spouse of the assessee, the student can be children of the assessee, the student can be any student for whom assessee is legal guardian. So this is another contrasting point. Then comes a third contrast. In tuition fees, where is the education happening? Here the education has to be in India only, no other choice. But in interest on education loan, the education can be in India also, the education can be outside India also, it doesn't matter. Okay, then I'll show you one more difference. Okay, in tuition fees, what kind of education are we talking about? It doesn't matter. It can be school education also, it can be college education also. But in interest on education loan, what kind of education are we talking about over here? Here we're talking only about higher education. Higher education means what? After school, after 12th standard, after senior secondary exam, higher education, college education is what we're talking about in ATE. Are you understanding these contrasting points over here? Yes, guys. So because of this reason, these 2 points become a little confusing in the examination. That is why if you see in your Jan 26 question paper, in the total income question, they gave one adjustment. In that same adjustment, there was tuition fees point also, and there was interest on education loan point also. So very often, they've started giving these 2 adjustments together because both the adjustments are ulta pulta and students will nicely get confused. But you be crystal clear with this differentiation factor. Alright everybody, yes, that's it with this discussion. So if I have to come to this question here, assessee was One second. Huh. So here Ceci was paying tuition fees 42,000 for 3 children to a school. Fees is 14,000 per annum per children. So if you're paying for 3 children 14,000 per annum, how much will you allow under ATC? Only for 2 children you will allow. So 14,000 into 2, 28,000 only you will allow under ATC. Okay, that's it. So this is it with our total income discussion. The LDR questions with respect to total income. Some 6 questions we have worked out over here. With this, can I close my total income discussion over here? I hope you got some nice light bulb moments here and there. I think we're good to close this discussion over here.